Yo, what's good? Good morning, everybody. Sorry for the delay. Technology is amazing when it works. But yeah, if you could let me know if you hear me okay and everything looks okay, just let me know in the chat. Again, I've been having some issues this morning, so I just want to make sure on your guys' end that everything's okay. So if you could help me out with that, I would appreciate it. Just let me know in the chat. Clear and visual. Okay. Yeah, I don't know what's been happening today, but oh man, one thing after another. The mic didn't work, the camera didn't work, so yes. Again, sorry for the delay. But yeah, let's look at news real quick. Because it's a new month, we're gonna do our monthly process this morning. So we got some stuff we have to go over before we get into obviously overall technicals. So stick around with me to the end, and we will be able to go over bonds, yields, currencies, DXY, higher time frame analysis, our monthly process, as well as our weekly process, and then of course where we think the indices and DXY and all the other assets are going to be headed. So far everything has been working out exactly as we talked about, which we'll get into in a little bit. But yeah, it's kind of been the case the entire year so far. So next week is July. Okay, July 2nd is, what the hell just happened? For those that don't know, July 2nd is my birthday. So it's very interesting. NFP is happening on that day, or a part of NFP. And then we have a bank holiday, which is the July 4th holiday, Independence Day for America. So the whole week is going to be one of those weeks that most people will try to push too hard and get wrecked. Okay, so we know what we're doing, so we never overtrade and over leverage. And we're in the summer months, so expect things to be a little bit harder. I heard that ICT has taken a 3-month vacation, so he's not going to be doing anything in the market for the next 3 months. Now, you got to ask yourself why he would do that. Okay, he's done this every single year for the last 6 years, or at least since I've seen him, which, around like 5 or 5.5 years. So there's a reason, right? He said in a Twitter space one time that, we have to understand who we are. We have to know ourselves and our tendencies. And when there is certain environments in the marketplace or anticipatable sloppiness or harder to trade conditions like summer months, let me fix this camera. So yeah, when there's times like the summer months, different moments in time on the seasonality chart that show statistically that price has issues in terms of, maybe it's consolidating all the time during that moment, or, lots of news events like during a holiday. Let me turn this down a little bit. So, there's not every single moment in the market is going to be a high probability, fast-paced, trending environment. So, it's very important to be able to identify these different times of the year that price will be a little bit more difficult to engage upon. Okay, and the summer months are part of that equation, right? So from June, July to August, a lot of times it's more difficult to trade, meaning that it's a lot more choppy for the most part, depending on what's happening in the world, of course. But around those times, which we're in right now, you want to make sure you are limiting your overall perspective, right? There's going to be opportunities, obviously. We've continued to pull out opportunities through all different conditions this year, even the craziest of volatility. So there's ways to do things, obviously, but that is in no way an encouragement for you to go in there and start just swinging at anything and everything just because you feel like taking a trade, or just because there is going to be opportunities. It really depends on what your opportunity is, what model you use, the experience you have, and how you navigate certain conditions. I obviously teach how to do all that, like how to behave and think about certain scenarios. And this is going to be no different, right? So given the fact that it's obviously the summer months, our expectation is lower. So instantly our stop is, or our overall risk is dropped, okay, at least by 1/4%. Okay, so if you trade 1%, go into this next week with a 0.75% mindset. And of course, the beginning of the week and the end of the week is also a time where you got to lower your risk, okay? Because manipulation and consolidation generally takes place at the start of the week, start of the month as well. And then towards the end of the week and the end of the month, that's going to either cap the weekly and monthly range, or it's going to just continue to rampage or consolidate. Most of the time, it's going to consolidate or retrace, especially if the month or week has been very aggressive and one-sided, and it pushes us into a opposing PD array. So you want to keep that in mind too. So the conditions, like I mentioned, your expectation shouldn't be, let me go past 500 funded accounts. Okay, at least until we get a feel for what's happening within the month this month. Okay, and then how this week is going to start off, given the fact that it's NFP, plus we have a bank holiday on Friday. Okay, so yeah, so I hope all that stuff makes sense. Those are things that I encourage you to write down, because that is an experience-based idea. Okay, I could say this all day, and it may not have as much value as it would have for someone that has watched this type of behavior take place year after year, which I have personally done. And I have data and screenshots and many things going back to 2020, 2021, even here in this community, or not in this community, but in my private community. My free community is a little bit newer, the free Discord. And then, of course, me going live on YouTube has really picked up this year. But again, you can go back and see, for those of you that are in my private community, you can go back and see the comments I've made during these types of months and areas in the year. And I say the same stuff over and over because it happens over and over and over again. So there's some other months too, like December, January, November even. September sometimes a little bit difficult because of seasonality. There's a likelihood for things to be a little less clear. Doesn't mean that they will always be unclear. It doesn't mean that there's no opportunities. It just means go in there knowing that the risks are higher, and things may not work out exactly as you want them to work out. So yeah. So again, that is the environment we're walking into, given the fact that we're in the new quarter. This new quarter is obviously going into the summer. So that's how we're going to basically look at our risk and the information we're going to use to basically set the stage for what we're going to do in terms of risk management. All right, so I'm starting the week, and my mode of operations for risk control the last couple of months has been automatically 0.75% of my 1% risk, normal risk, simply because there's just too much crazy things happening, from wars breaking out to just a bunch of different changes in the financial realm in America. And there's just a lot of different things that could play a role in making prices do things that are unorthodox. Again, you guys that have been with me since the start of the year have seen, there's ways to engage anything. There's always something to talk about. There's always something to engage, as long as it's within your rules, and you understand how to navigate price, which is obviously what I do on these days, and in my live trade calls, right? So hopefully you guys have been able to pick up on a lot of that. But again, we're going into a new month and we're in a new quarter now, and we're in summer months, so we want to be paying extra attention to how we are managing risk and what we do on a daily basis. Okay, and then how we prepare for things is going to also be vital, and so it's going to make these Sunday calls even more important but they're always important, right? And they almost always work out. Not perfect, not all the time, but most of the time. So yeah, you can rest assured that you're learning from someone that knows what the hell's going on and can help you. Okay, so again, this is our news landscape. Monday has no trading or no news, so automatically that's classified as low probability until we see what's happening. Okay, so we're going to let the first couple days print, and we're going to get a feel for how the week is going to start in terms of the weekly range. And not only that, we're in the last couple days of June. So because we're at the end of the month as well, your expectation, again, should be based on lower probabilities, okay? And maybe pulling against what price has done overall, or just consolidate, because it's capping the monthly range. So a new month is going to obviously start in July 1st. So, then the whole process of Power 3 starts over again for the monthly range. Okay, so with us being in a new month, okay, let's pull up some of this different stuff. Start here. Okay. So if you look at the S&P, okay, this is going into July. So there is a pretty significant alignment here with all three of the time intervals for seasonality in July. For those that don't know, I post these every single day, or not every day, but every week, every week and every month. Sometimes I don't include it every week because just the monthly perspective on this is obviously the most important. Seasonality is more of a month-to-month type of thing, year-to-year type of thing. So, it's not necessarily a be-all, end-all, obviously, but as ICT says, it's a treasure map. It's a good way for you to add confluence to a particular narrative if it makes sense. Like if it's bullish and we hit a bullish daily order block or weekly or monthly order block of some kind, or maybe a different PD array that we expect is going to push price higher, and we see seasonality going into a new month where this is happening, being bullish, then you can continue to add on confluence that supports that overall narrative going higher, okay? And then vice versa, if it is going lower, same thing applies, right? But you want to make sure that what you're looking at in seasonality, if you're going to use it effectively, is in alignment with whatever's happening in real time on the real chart you're looking at. Because if it's just skewed and things aren't really looking like they're following the seasonality roadmap, then that's telling you something as well. That's telling you that things are happening in the marketplace and something different is taking place, and you want to be cautious. And if we're, say, in a bearish market and we see a very strong bullish tendency in the seasonality chart, generally that's going to basically outline times in price where we should be able to see a retracement at the least. Okay, like if we're extremely bearish but we see this, generally that moment in time where you see the overlap of all three time intervals, generally that's going to be a retracement mapping type of idea. Okay, but again, if it's going in line with what the higher time frame is doing on the asset you're trading, then again, that's just a very strong confluence. And certain times of the year are extremely overwhelming when it comes to seasonality delivery. Like May, right? May, which is over here before June and July. May generally has a very strong bearish seasonal tendency. So what happens? Generally, May will sell off. Go back and study this in your chart, right? Just that simple example, if you go back and look at it over the last 10 years, shows you the dynamic trust that can be built in confluence that can be utilized when utilizing seasonality with whatever asset you're trading. Again, some people don't like the fundamentals because they're like trading on the 1 second or whatever. But again, we have a large view, and that's how I've been able to continuously throughout the entire year live in front of students and you guys and my private community as well. All year I've been able to call the market and be on the right side and get everybody on the right side. That's not happening just because I'm on the NASDAQ higher time frame. Okay, that happens because I have a lot of deep analysis that goes into this, including the seasonality, COT observations. No one tool is a be-all, end-all. Okay, just so you guys, can make sure you understand that. It's all used together as a machine or a system, and that system, generally presents us with pretty solid results when it comes to where's the draw on liquidity, what's more likely to happen over another thing, so on and so forth. Okay, so this is just one tool in the arsenal, or in the bag of weapons we have, to basically allow ourselves to corner price, as we did last week as well. Okay, so yeah, let me ask you guys this. So do you guys use seasonality? Have you guys used it? And if you do, or even if you don't, does what I just mentioned make sense in terms of what we're looking at here and how to use this? I've talked about it before, but for those of you that are on here, let me just get a feel for your thoughts before I go ahead and move on. So let me know in the chat real quick. Yes, and now I see that it helps with overall analysis. Yeah, exactly. That's what it is, right? It's not a tool where, seasonality is bullish, so let me just go buy. No, you have to have seasonality aligned with a higher time frame delivery. Plus you want to have risk on, risk off, which is the whole analysis what we do on Sundays. We look at every asset that's important to the indices, right? And then we get all that, we pile the data together, and then we make a determination as far as what is going to be more likely than another thing, And you guys have seen, like I said, if you've been here just for the last couple of months, let alone the last 3 years or the last year, you've seen how dynamic this stuff is, and it's incredible. It really is. And obviously entries and stuff vary, and intraday price delivery and what you engage obviously will vary. But again, the whole point of this channel is to get you guys clarity. Okay, because if you have clarity, it makes a whole lot of the work a lot less stressful, and it continues to build that belief system because you're able to call the market so you don't quit, and you can continue to chase your dreams and, become a very effective trader and trust yourself. Clarity and trust is the main goal of this channel. My goal is not to get you in trades. My goal is not to have you come over here and think I'm like the GOAT or something. My goal is to get you to have clarity. And based on students like Tony and a handful of others that follow me and hop on continuously, let alone my private community, I've seen a lot of good results, a lot of strides in your guys' overall progress. And again, it just shows that what I do here is, transferable. I'm not a mental giant, right? And I guess the way that I explain this stuff is easy to soak up and, then utilize. And I'm extremely grateful for that. And also grateful for you guys that hop on with me continuously. But yeah, just a reminder though, with all that being said, if you guys could like the video, subscribe to the channel if you aren't already, if you enjoy the content. I really appreciate it. It helps the channel grow, and tells YouTube that more people just like you should watch these videos and get the gems that are provided here absolutely for free. Okay, so yeah, and share the page too if you feel there's anyone that could benefit from it or add value. That is much appreciated, because you're helping me help other people. So yeah. So with that being said, one more thing, obviously, when you're in the seasonality charts, you want to make sure you're looking for times when there's overlap, okay, in one direction. You also want to pay attention to times where a low forms seasonally that in the seasonality chart shows a large run, because those are times when you could reasonably anticipate seasonal lows, seasonal highs. You can also have it help you anticipate when there's going to be times of consolidation. Like, look, the last couple months here, it's been sideways, right? Since over here, right? May did have a decline, or does have a decline generally. ICT has a slogan: "Sell in May and go away," right? It's ironic that guess what he did? He went away, right? He's gone for the next 3 months. So I mean, that tells you something. Those are things you want to pay attention to. But when you're looking at seasonality, you want to make sure you're observing moments in price in this seasonality chart over years. Okay, some in decades, where things are either consolidating, where there's a low or a high that forms that has a strong movement away, because those are times when you could start to map possible seasonal highs and lows. And then, of course, the most important thing is finding agreements between the 3 different time intervals. Because if there's a low that forms and then extreme agreements between the last, 30 years, between, 5, 15, and 30-year time windows, you could just imagine how strong that is, or how strong that tendency would be to do, like in this case, bullishness, right? Towards the end of the year, there's generally a Christmas rally. And that's also shown here in the overall seasonality chart, let alone if you go back and look at things from the last 10 years and observe the behavior that's happened around that time. It's the same goes for each of the months. I do encourage you guys, if you do want to take my advice and you value what I'm telling you, you want to make sure you go through at least, at a minimum, the last 10 years with this perspective in mind, and document, what does the seasonality chart say about January, all the way up to December, right? What is a characteristic on the seasonality chart? What does it promote? And then go back and look in the real chart. What did it do in January? What did it do in February? And then you want to compare all the years and see what happened more over another thing. Like, was it more bullish or bearish? Or did it just consolidate for most of the time during those 10-year intervals? Okay, and when you do this, you get a very useful, piece of data that you can use to help you forecast long into the future. Okay, what's up, Dolfo? What's up, brother? Appreciate you hopping on. Hope you get some value today. But yeah, so if you do this, yes, it's possibly the boring stuff, right? Well, I always say, what is more boring than having to go and do this? Well, what's more boring and heartbreaking is failing to trade when you know the opportunity's here and you just, lack the discipline and drive, I guess, to go in and do the things that are supposedly boring. If you're doing any analysis or any learning in trading, you should remember, you're not here to be entertained. You're here to gain a skill that's going to change your family tree. Okay, so is that worth sitting through the boring stuff, so-called boring stuff? I think it is. So you want to have that argument with yourself whenever you think that something is boring, because that boring stuff is what most of the professionals are using to continue to be dynamic and always have something to do, or for the most part have something to do that results in a positive outcome. All right, so yeah, keep that stuff in mind. But yeah, so I encourage you guys, if you are going to take my advice, to go and do this. I've talked about this before, and only a handful of people do it. I noticed that most people don't. And it's unfortunate, because then they sit back and look at what I do and what some of my students do that are thriving, and they wonder, why can't I do it? What am I doing wrong? And most of the time, it's not taking the advice that's being given to you, trying to do things on your own way, as if you've already arrived. And, you got to humble yourself a little bit. I know I had to. And, take a step back and do the things that most people are encouraging you to do, that you classify as supposedly boring, right? So, yeah. So, again, with all that said, again, I encourage you guys to look at these charts. I do have these across my overall communities. I purchased this service, so you guys are getting it for free, most of the information that's needed, right? There's obviously more stuff, but this is plenty, right? And I have a bunch of different ones. I have some for the bonds, the DXY, and then, of course, the 3 indices. I have some for the currencies and gold and silver, so on and so forth. But for the most part, I just highlight these for you guys. Okay, so again, in July, we are seeing that there's a pretty heavy overlap of bullishness and a potential seasonal low that forms. We'll see. We're in a new quarter now, so again, we got to fill out Power 3 for that 3-month perspective, which is something we're going to take a look at in a second. But yeah, you want to keep this in mind, right? So there's an interest for it to want to continue to go higher, and argue with yourself and think. Is that in agreement with what we're seeing in price as price continues to print, right? So you'll use this as an extra confluence if we are going to look to buy. Okay, So that was the S&P. Let's look at the NASDAQ. So we see a very similar overlap. Okay, remember sell in May, go away, right? May, June generally is a harder condition. And then, of course, July, based on this chart, a lot of times will pick up and accelerate in some capacity. Sometimes it doesn't, right? July is not generally the best month, which you'll see if you go and do the study from the last 10 years. But yeah, we'll keep that in mind, okay? Dolfo said, I watched your live stream for the first time last Tuesday, and I find it extremely valuable. You sound more real than the ICT trading gurus on YouTube. Yeah, I definitely do my best to separate myself. I am not some person that wants to be famous. I'm not someone that wants to just shill content to people so I can get rich off that. I already make enough trading. I do have a private community, obviously, which a lot of these people have, but it's a waste of money. So I do offer more support, but I definitely try to separate myself with the things that I talk about. I try to do what I needed. I try to be the mentor that I needed, aside from ICT, obviously, because he's a tremendous mentor as well. And I give credit where credit's due. But sometimes certain people's perspectives don't align with certain personalities, and sometimes things are overcomplicated, especially in ICT's concepts, because he's even admittedly said it before, that he did it on purpose because people would steal his stuff and try to claim that, he's not the mentor. Like, they created something and they've been trading for 2 years, and it's just unfortunate because it hurts people. Like myself, I was hurt. I lost $12,000 in the first 3 months of me trading. Okay. And I thought I had it all figured out. Even when I was blowing the account, trusting these people on social media, giving signals and, trying to sell you the dream, and none of them actually know what's happening. So I do my best to try to separate myself and give you guys details that, again, for being on this YouTube, provide you clarity, right? And then clarity will build trust if you're organized and, follow the processes I put on display. And then eventually you're able to walk on your own. And of course, if there's a need for more support, if you want to get around traders that were just like you, that, have been with me for a long time, that can vouch for what I do, and then, not only with their opinion, but also with their results. Again, that's always something that's available as well. People look down on a lot of that stuff because of the taste the industry has given people because of all the scammers and nonsense, which is why I don't shove it onto people. If you're going to come and want more support from me, it's going to be because you sat here, watched me on YouTube, and feel that I can actually help you. And, the whole pricing with that is also intentionally lower than every income. Okay, and it's never going to be. My main income is going to always be from my trading, and it's just the way it's going to be. Because if you can't do that, you have no business teaching anybody to trade. If you can't do that, why are you teaching anyone that wants to make this work for them in some type of financial capacity? You have no authority to teach, yet so many do, and it's unfortunate. So yeah. Dolfo, I appreciate you hopping on as a new listener, and I'm glad you've been getting value. And if you have anyone else that you feel could get value from what we do or add to the conversation like yourself, definitely invite them to come and check out what we do here. Or, maybe they want to hang out. That's cool too. So yeah, again, I appreciate you and thank you for your support. So yeah. That being said, I don't know why I just moved this. What's up, Freddie? Welcome back, my brother. Amazing. I'm not sure if my little brother's on right now. Maybe he is. Maybe not. But yeah. So if we look at the dollar index too, we just came to the determination that both the S&P and the... I don't know why this keeps doing this. We could see that the seasonal influence on the indices so far is bullish, overlapping the 3 time intervals. So if you take a look at this is an even larger time frame, 40 years. So this is an even heavier indication, if all things align, that there's a strong seasonal tendency for that overall delivery to take place. Especially the lows and the highs that form seasonally. Each of these green lines delineates a quarter. So first quarter's over here. Right, starts over here. second quarter, third quarter, which, you know, we're inside this area starting the third quarter, and then the fourth quarter is over here as well. So, you know, we could see there's a seasonal high that forms somewhere in July, and then there's a pretty strong sell-off within the DXY. There's, you know, some agreements here trying to go higher. So, you know, it's kind of a mess going into the summer. You know, we got to keep that in mind. Like I mentioned earlier, as a prerequisite to this call, we're in the summer months. And not only that, again, ICT for the last, you know, for as long as I've listened to him, he's always done something dramatic. Either take his kids on vacation, take himself on vacation during the summer months, or just, you know, tell the public that he's going to basically take 3 months off. You know, it's especially true and relevant in times like we have here with all the stuff happening, wars and whatnot. You know, a lot of stuff can happen. So it's even more important to keep in mind these rules, different opinions, like, you know, for example, the fact that ICT he's taken 3 months off, and he's done the same thing for years. You know, again, that doesn't mean that there's no opportunities. It's just an intentional thing to make it really drive the point home that these are times that you got to be more cautious. You know, and you can't always think like full speed ahead in every moment because, you know, not every moment's going to be high probability, trendy, easy to read price delivery. Okay, so yeah. So yeah, with that being said, again, we're looking at the DXY. It has somewhat agreements, but we'll see. You know, DXY still hasn't really given us much to basic. Hold up. I want to cough in your ear and push the mute because it didn't unmute. Can you hear me okay now? Let me just make sure. Sorry about that. Yeah, okay, cool. So yeah, I hope everything so far for seasonality's made sense. It's not rocket science, it's not a be-all end-all, but it is a great overall confluence to use when you're doing a monthly analysis, which is what we're doing today. Which is why today might be a little bit longer because we have a little bit more stuff to cover. So we'll see. But I will get through it and make sure you guys understand what's happening. So I hope this seasonal influence has made sense. And again, if you wanted to go, take some of that resource, you can. I post some of them in the free Discord as well, so you can go do that there, or all of them are in my private community. So yeah, with that being said, if we look at the COT, now when you're looking at the COT chart, again, it's not a be-all end-all. It's just something that you study based on the data the chart gives you down here with the open interest and the COT position line from the commercials. You take the last 6 months and you get a feel for, where's the high extreme and low extreme, where's, the midpoint of that, and then you break that down in half, so then you'll get a little you'll get a little range to look at, and you'll get your actual zero line when you take the last 6 months high and low, given the data here. Then you split that in half. Again, that is your real zero line. If we're above that zero line, generally there's a bullish tendency. I mean, that is pretty obvious that that's been taking place. It's been like that above the zero line from the last 6 months range since we were down here, which is part of what I used to help me gauge whether this yearly order block low, which is what this was, and I called it before the fact, whether that was going to hold or not, and then how trustworthy it would have been for price to break above here, and then basically create this type 2 dealing range reversal, which is somewhat of an advanced topic, but it's one of the tools that I use to add confluence to trust this entire run higher, let alone the market maker buy model that we've been following too, which has at this moment fully delivered, right? Yet again, on point, months in advance, had bias, and narrative for months together. At this point, the whole entire year, we've called the downside and buy side. So every single delivery from this higher time frame, whether it was shorting or buying, we've been able to confirm and get behind. Now, that doesn't mean you're going to get in there and be able to be perfect. I'm not perfect. But this year, I've shown that I've been hitting from overall, an overall percentage basis, 75 to 88%. So, that's pretty good. Okay. And again, it's all documented. You can go look at it. But yeah, essentially you get the last 6 months range, split that in half. If it's above the zero line and price is looking like it's bullish, maybe has a bullish order block or looks like this, that is pretty significant, right? It's continuing to confirm the price is going to continue to go higher or have an interest more long-term to go higher, because that's what this and seasonality are. Those are a higher time frame, more long-term, quarter-to-quarter, month-to-month basis analysis tools. Okay, and again, if we get in line with that, we have bias and narrative for weeks, and we don't have to flip-flop or worry about the seconds chart, 1 minute chart, 15-minute chart going against that, because we'll know that that's just a setup for a retracement to go higher. Okay, in this case. All right, and then you can also cut the upper quadrant, right? So say you take the high here, the low here, extreme on this data, you split it in half, you now have your 6 months range and your real zero line. Well, another thing, if you want to get closer to price to have a week-to-week tendency that has to do with COT, you basically break the upper and lower quadrant, and depending on where the COT line is in relation to the upper quadrant and the lower quadrant and that zero line, depending on that, you can gauge whether we are in a buy program or a sell program using COT data. Now, again, that's more advanced. I'm not going to get into it too deeply now. I do talk about it in my private community a little bit, but you can also obviously get it explained in greater detail through ICT's concepts as well on his channel. And again, part of this relationship we're looking at, aside from the last 6 months range and the data that provides us, we also want to look at the overall delivery or data based on the open interest and the COT, whether we could find something like this taking place. Okay, so if we have open interest rallying aggressively and we have COT declining aggressively, that is generally a bearish signature, basically stating that they are offloading their buy positions if price is going higher, and we see this happening, because that's a bearish sign. It's very similar to SMT, but we're using the open interest data and the COT data to be able to gauge whether price or whether the smart money is looking to offload one position or another. In this case, with higher open interest, like really going dramatically higher, something like this, or going lower, something like this. Take that, merge that with what COT is doing, and then you can obviously get a gauge as far as whether it's offloading potentially short positions, or offloading buy positions, or offloading short positions. Okay, so if price is like declining aggressively, going into a new quarter, going into a new week, a new month, and you see this taking place as price is tanking, basically open interest declining like this, and then maybe seeing the COT aggressively moving higher like this, which we kind of see that taking place here, right? Drop in open interest, rise in COT. So this may lead to us getting a retracement in the near future, especially because we're in the new quarter. This whole new quarter may end up being a bearish quarter. We never know. We've been extremely bullish, so I wouldn't be surprised even if there's a short-term retracement, because the signature here is showing an offloading of overall buy positions. I mentioned this also, I think last week. So if you go look at that, I slipped that in. This is how I determine that, offloading or offloading buy or sell positions. And it would be reasonable given how aggressive price has been to the buy side. It would be reasonable for some type of significant retracement to take place. Wouldn't you agree? Right? Price doesn't go just, one side forever. It has to turn around for amount of time. And, again, when that's going to take place can be anticipated through the identification of data through the seasonality, and then, of course, more advanced with the COT, which, again, these take time to watch them unfold and watch the principles work. But again, I'm speaking from experience from the last 5.5 years using this. So I haven't used this the whole time, but when I figured out the things that I've just mentioned to you, and then watched it over a year or two, I noticed that it was extremely beneficial. All right, so yeah, and again, if the seasonality is not making sense when you're looking at the chart, or the COT is not making sense, whenever there's a tool that looks like it's out of alignment, when there's other confluences that are providing evidence for a particular idea, you want to put the data aside for a minute, and then just try to see if price is going to kick back in alignment with it, or if it becomes useful later on. Not every moment in price is going to have a use for seasonality and COT. The only reason I'm spending so much time here is because, again, we're in a new quarter and we're going into a new month. So these are the things that I focus on when I start the beginning of a month or beginning of a quarter, and stuff that I glance at when it's the beginning of a week. Okay, so yeah, that's for those that may be wondering, why are we looking at the other charts already? It's because this is the process, right? This is what this video is going to entail, is the monthly and weekly overall higher time frame view, and what I use within that process. I'm giving you a process right now that you could utilize well into the future, right? For, in this scenario, a monthly analysis, and how you can get the data, use the data, and then look to study it as price prints. Okay, so yeah, I hope all this stuff has made sense so far. Again, if you guys have any questions, I don't expect you to be a master at this. It's impossible for you to do that within one video. But just take consideration to the things that I'm looking at because of the start of the month, and then the considerations I'm giving you also for both tools, COT and seasonality, okay, and how to use it. Right, so yeah, with that being said, and then again, I send this paragraph out every single week to all my students just to set the stage. So July is about to get started. At the beginning of the month, you always check seasonal chart and observe COT, as we're doing here. You want to make sure you're looking for possible quarterly shift ideas, basically breaks in market structure on the higher time frame, opposed to what's already been taking place. You want to also use the look back 20, 40, 60-day idea. If you're not familiar with that, go check it out on ICT's, I forgot what month it is, but it's in the mentorship videos. I talk about it from time to time. I definitely talk about it and have a video of myself explaining it in great detail in my private community. But again, this is another one of those things that's not a be-all, end-all. I can say that between the 20 and 60-day overall view, which I'll show you guys in a little bit, there's generally a strong continuation move or a low or high that's significant, or it's an overall shift in sentiment, creating a quarterly shift that again generally happens within the 20 and 60th day from the month that starts a new quarter. Okay, so June is the month, for this quarter that started this new quarter. June, right? June 16th is when the quarter actually starts. But in terms of look back, cast forward, if the data range idea, you want to make sure you're placing your line of reference at the start of the month that generally pushes us into the new quarter. So again, in this case, would be June, because June 16th is the start of the third quarter for the most part. Sometimes it's 17th and 18th, whatever. But that's not important when it comes to if the data ranges. We're looking for the month that starts it, and then we place our line, cast out 20, 40, 60 days, and then within that 20th and 60th day, there's a significant move, which I'm going to show you proof of, which again was anticipated in the chart, okay? Because I've been talking about this and had that lined up and ready to frame out as we went into the new quarter. Okay, and then of course higher time frame references we always observe as previous days highs and lows, previous weeks highs and lows, previous months highs and lows. Those are higher time frame references. Also obviously higher time frame PD arrays. Not sure why I don't have that labeled. All right, so yeah, with that being said, Again, this is just like a thing that I continuously send out just to set the stage for what is important, right? Because again, clarity, right? I'm here to try to give you clarity and teach you how to have it on your own. Okay, and these are the elements from the higher time frame analysis concepts to overall just breakdown of what's important. All right, so and then of course, those are the higher time frame views, and then we also have lower time frame references like session highs and lows, which is London's highs and lows, previous AM and PM session highs and lows. Those generally can be early targets too if we're on our way to one of these higher time frame levels. Monday's trading, right? You got to keep tabs on what Friday's high and low is doing, which is we're going into that as well. So going into today and tomorrow, in terms of Monday, one of the key references we're going to look at to be targeted before any of these other higher time frame levels are met, it's going to be referring to Friday's high and Friday's low, because that could be easily presented as the opposing liquidity, right? Same with the previous day's highs and lows. A lot of times, or session highs and lows, those are also a lot of times set up in the manipulation move to trigger in liquidity on the opposing side, so then smart money can target like a buy side delivery, right? If it's going to buy, most of the time it's going to take out sell side, right? First within one of the sessions, or going into New York. So what lower time frame levels can be the opposing liquidity that are near term if we're bullish for the day, for example? Well, any of these levels in here that have a significant or has an obvious low or equal lows can be utilized, and maybe the open price is up here, but they're dropping down to the London's low or previous AM session low or PM session low or Friday's low, or maybe there's a new week opening gap below us. Maybe there's a regular trading hours gap below us also that has equal lows from London, right? And then, maybe that's next to the open price for the daily, right? So they'll push down, sweep that, and then going into New York, you'll see, something set up in terms of power 3 to go higher. And then, of course, you flip it, and it can also be used the other way. So that logic is very, hopefully not confusing, but it's just showcasing the manipulation characteristics. And then I'm also, again, highlighting different levels of reference that you can use within that framework I just described to you in terms of navigating or identifying the manipulation and how that behaves in terms of the relationship between it and liquidity. Okay? And then, of course, it's first presented for value gap in New York session, new week opening gap, new day opening gap, regular trading hours gap, so on and so forth. And those can also help you with identifying whether we're in consolidation or if we're trending. Like if they're bouncing around those levels, right, and it's just not breaking out, clearly, and if we're also overlapping on the higher time frame in terms of candles, like big bullish, then big bearish candles just overlapping on the daily, weekly, and monthly, that is also significant in identifying whether we're in a consolidation. Okay, if we have a bunch of fair value gaps being left open and prices just aggressively running towards a specific level, let's use a bullish example. Say it's racing that way, it's leaving fair value gaps open, it's leaving lows open, or it's taking lows and then taking out highs aggressively on the higher time frame. It's respecting bullish order blocks, bullish fair value gaps, any other PD array is just respecting bullishness. That's all indication that we're in a trending market going higher. And then again, you could flip it the other way for bearishness. Okay, and also, of course, breaking through levels like this, showing little to no respect or interest to deeply fill into those levels. Those are also characteristics of a trending environment. Okay, so yeah. So again, I hope this overall overview makes sense here. If you have any questions about anything, let me know, obviously. I'm definitely going to try to get through this quick. So again, if you guys have any questions, I could slow down and stop. But hopefully, up until this point, everything's made sense. Because what I've just told you about is something that, there are elements that are crucial to what it is that I do. And if you like what I do and think that what I do is, decent, and you'd want to, have that type of skill set, these are things I'm not sharing these things for no reason. It's stuff that works. It's not something to blow smoke up your ass. If it didn't work, I wouldn't talk about it. There's a lot of stuff that I don't talk about because they don't matter. Okay, but because I'm mentioning this stuff, definitely consider the value that it has and how it can help you. All right, and again, if you have any questions about any of these elements, let me know. And yeah, so yeah, with that being said, we talked about the news, we talked about fundamentals, and just overall what's happening there. So as always, we are going to start here on the bonds and yields. So interest rate markets are always our first market to look at, because why? It dictates what the DXY and the indices are going to do. And then, of course, as a result, it also influences the foreign currencies. It also influences gold, silver, right? There's an impact that the interest rate markets have on that. And again, all the assets together, from commodities to indices to currencies to DXY and so on and so forth, all that together creates the process of risk on, risk off analysis. Okay, risk on means that overall traders like the smart money or businesses or whatever, they're willing to put risk on other assets opposed to the DXY. Risk off means they're not willing or trying to take risk off of the other assets opposed to the DXY. Risk on generally means that DXY is going to be bearish. Risk off means that DXY is going to be bullish, right? So that means that the obviously the indices are going lower, currencies going lower, and the risk on is obviously those going higher. Okay, currencies, commodities, so on and so forth. Okay, so that is what this analysis is going to determine, right? So if we're looking at this asset here, we have a bullish order block, a large wick. Okay, let me close that out real quick. So again, we have this bullish order block here on this monthly chart. So again, if you guys have any questions, let me know. I know I just kind of blew through a ton of information. But again, it's all stuff that I've talked about before. But again, this is the monthly analysis process. So keep that in mind. Note that down. Every single time I get on the chart with you guys, I'm giving you a process, or I'm reviewing a process, or I'm implementing a process that I already talked about. Okay, so you want to make sure you have this, because you got to have an answer for what's your monthly process, what's your weekly process, what's your daily and intraday process. Each of those elements has a process, and I talk about those things and showcase them to you. And I've also showcased now the results of those processes and how effective they are, and how they can help you. So keep in mind that if you haven't written anything down or screenshotted or saved something in your journal with what we've talked about, I want you to make sure you do that today, whether you have to review or just do it right now. Right. Okay, so again, the first thing we always look at before I skip over that is basically we've got to think about the fundamentals we just talked about, and we also want to keep in mind the list of liquidity pools that I gave you guys, the references, okay, the overall reference points. So previous month's highs and lows, week's highs and lows, days highs and lows. So we got the previous month's high and low up here and here, but we have a current monthly high here. Okay, so this was from May, and this is June. So this is our current monthly high, and this is going to be our current monthly low. Okay, so with that being said, the next month that prints, if price opens up here within this previous month's range, if it's going to go lower and say attack a little bit further inside this order block, the first liquidity pool from this monthly chart that's important is going to be the monthly low, because that's where price is closest to, right? It could wick through it and then go higher because it's still bullish, right? So, but the overall thing that I want to make sure you understand is important is what levels we're looking at when we switch to a particular asset. Like in this case, it's the 30-year bond yield. Okay, this impacts what the DXY is going to do, the 30-year, 10-year, and 5-year. So the first thing you look at, whether you're on any other asset, is going to be higher time frame highs and lows. In this case, we're on a monthly time frame, so the current monthly high and low, and then PD arrays that are in close proximity, whether it's a large wick like we see here, which I think the mid portion is being respected. Drag that down. Yeah, we kind of pushed past it a little bit, so we'll obviously keep that in mind, but we'll see what the impact is from that. But we're at equilibrium, or the midpoint of that overall wick. So, we're kind of hanging around there. Let's go kind of get a feel for the most recent fractal low to the most recent fractal high. We could see that the monthly equilibrium point is right up in here. And so high to low. So the monthly equilibrium is here. Actually, I think I'm going to keep that there. Okay, so we got the monthly equilibrium. So from this swing low to that swing high, this is the most recent energetic swing low to the most recent energetic swing high that turned into a retracement after we've been so bullish. So we're just retracing to a discount for now. We need 3 PD arrays on this monthly chart to be violated if this was the time frame that we're solely going to use for bias and narrative analysis. So we need to calculate, or not calculate, but map out our 3 PD arrays. So mid portion of the order block is 1. We've got a volume imbalance, which is 2. We have a large wick here in the midpoint, which is 3. So I would have to say that overall, for me to be bearish on the monthly chart, more long term, I would have to see this mid portion of this order block get violated, and if that was to be closed below, then my attention would then longer term go down to the lows down here. First and foremost, that would be each of the lows, and then the wick, right? All the quadrants within that large wick. That could end up being something. And of course, if we were to break through the mid portion of this and close below it, we'd also have an inversion for value gap here as well as over here. So then that would support our idea on the monthly chart in this asset to then go lower. So the principles that I just described and always describe are all universal. Okay, the first thing we looked at are these levels in here when we went to the monthly chart. So what do you think my advice would be for you to do if you go to the indices or the currencies? My advice would be to do the same thing. Look for the highs and lows that are most recent within the current month. If you're looking at the monthly chart, get the high and the low. Get the previous month's high and low if it looks like it's reasonable to get blown out. And then, of course, get the close proximity order blocks for value gaps. Close, right? Not like this fair value gap's too far. Not even this high, because that's also too far. Okay, at least for the coming week. But this order block here perfectly got traded into. Okay, so we'll put the monthly order block. And so this is going to be something very significant. Okay, it's going to be one of those, if I can find the damn monthly order block. I don't know why I didn't have that. Okay, so yeah. So again, everything that we have identified here, the process, the important levels, again, this is universal. So again, my advice to you, if you're taking my advice and trying to figure out how to do your analysis, where you should start, obviously start the way that we started the video. But then when you get into the chart, you want to make sure you're looking at these levels, the current highs and lows, the previous candles highs and lows. If you're on the monthly, look for candles because it takes forever. And then you just look at the close proximity order blocks for value gaps and get a feel for the most recent swing low to the most recent swing high, and you get a monthly equilibrium point. So that's your equilibrium. So price was to get down here and then stall and go sideways when it hits that level in the lower time frame. You can imagine that, or you can utilize the information that we are at a monthly equilibrium portion, which promotes, when we're at higher time frame equilibrium points, that promotes consolidation, especially if we go into a new week or new quarter or new month, right? So for now, we're going to observe what this monthly order block is going to do. Is it going to give a strong reaction from there? And then, of course, if it does, then we'll just continue to look and seek buy-side liquidity. And we also have the monthly high, but overall, we may reach into the wick quadrants here. Each quadrant, 25, 50, 75%, the high. All of those can be targeted, okay, and framed as a target on our way to these greater levels, okay? So yeah, with that being said, so yeah, but if we break down below this, that's going to be our buy. It's going to be our buy invalidation or bullish invalidation level. Okay. So yeah, all right. So yeah, with that out the way, I will continue to try to see if there's a reason for us to potentially want to buy until something changes. Now, if we look at the other assets here, we do see or other variations of the time elements. We do see that we're inside of this monthly bullish fair value gap. We do see that price ran higher, broke down below this swing low, created this bearish order block. Okay, so we want to make sure we watch what that impact's going to be, because if it holds this and just refuses to come up here, we may see price look to continue to seek the sell side down here. And then of course, if that's the case, then this will probably follow along eventually. It'll just become the lagger. But we'll be able to take these two and justify that price is now going to turn around and go lower. But again, I'm going to have to see a little bit more information on that. We are at the moment seeing that this order block's holding. I can say that if we do break outside of this monthly bullish fair value gap, it'll be used as an inversion. And then again, we could then adjust and then look for the sell side down here as a reasonable target. And these are failure swing lows. So they're relatively equal to, right, this one and that one. So again, if that was to support this and get down below this monthly fair value gap, we will probably look to blow that out. And then if it blows that out, again, we can use this as an inversion. These consecutive up candles, if we move up to 2 month, let's move up to a quarterly, we see that that's also a bearish quarterly order block, which may set the tone for this to want to maybe seek even further strong sell side delivery. So again, that's kind of like a grander view. We got to see more evidence of that. So far, it still hasn't fully invalidated the overall run higher or respect to go higher. That may change, obviously, if it gets below this. That'll be my last line of defense for continuing to try to push this to go higher. And then again, we should see the others pick up as well to the downside if that is going to be the case. Okay, so yeah, for now, we're going to try to see how price is going to hold in here. We need more information, just like last week. And then, of course, we're inside this bullish order block, so we want to see what that behavior is going to be like, if it's going to continue going higher. If this does continue to support buy side, that is a positive impact on DXY, and that we would potentially see DXY look to turn around and go bullish, because this impacts it that dramatically. And then, of course, if this was to go lower, that is supportive of continued bearishness in the DXY, and that's a positive sign for bullishness continuing in the indices, which again, that just simply highlights why we spend so much time here, because it's that important. The markets aren't one-dimensional. They're multifaceted, multiple dimensions. So that's why you as a trader need multiple skill sets and multiple weapons in order to corner price, as I like to say. So yeah. So I hope that made sense. Do you guys have any questions about this asset class and what we've done here? The universal nature of the analysis we did. Is there any elements that didn't make sense? Let me know in the chat, and then we will move on. What's up, Fritz? Good morning, my brother. God bless you, man. Hope you've been having a good Sunday. So that's a good question. Which one moves first? Generally, so yeah, we're going to get into a little bit more of an advanced idea here. So generally, the 30, 10, 5. Oh, so between the 30. So I'm not really sure, honestly. I've never really identified that. Because they're all separate assets. They're all separate products. Okay, so they're correlated, right? Because they're very much influenced by similar things when it comes to the U.S. economy, and just overall, purchasers of the bonds and whatnot. They're definitely different investments, 100%. This is basically U.S. debt, right? That's basically what it is, right? They're selling bonds to be able to get more debt, right? And people have to buy that, which is basically them buying U.S. debt because they believe in the country and whatnot. And then we can use the sales from the bonds, to then go buy things and run the country and get debt, which is stupid. We shouldn't have so much debt. It's dumb. But yeah. But when it comes to the interest rates and the assets they influence, a lot of times you'll see that the interest rate markets will move in the direction that we want to see the indices move in. And it'll be kind of like a lagged response. Sometimes it moves exactly the same, right? Like this will go lower and this will go lower, the bonds will go higher, and the indices as a result will go higher too. Sometimes it's in sync dramatically when it's a very healthy environment. Sometimes it lags, like the interest rate markets will take off first. Say we're looking for bullishness in the indices, and we'll then see the yields drop aggressively and the bonds expand aggressively to the buy side, while the indices are in consolidation after they just sold off and hit a sell side liquidity pool. Then that'll continue for like a week, and then all of a sudden we'll then get a shift in the indices to then support what the bonds and yields are doing, right? Supporting the buy side, right? So sometimes it's a lagged behavior, sometimes it moves together, but again, those are very subjective depending on what's happening in the chart. That's a variable, right? Sometimes it's one way, sometimes it's the other. But overall, sometimes this can be used as a crystal ball, as far as if we're in consolidation on the indices, for example, and we're expecting still higher prices. You could confirm that if you look at the indices and continue to trust, or if you look at the interest rate markets in comparison to the consolidated indices, and if you see that the interest rate markets are supporting, say, buy side, but the indices are consolidating, then you'll be able to continue to anticipate that buy side is going to have the breakout more likely than the sell side if it's supported by what the interest rates are doing. So interest rate markets can be used to anticipate or be used as a crystal ball when you're inside of consolidation, And again, that's something you want to take time to study over the years, which again I've done and seen the evidence of, that relationship and impact. But that's a study I want you guys to dig into too. If you're someone that heavily looks at the interest rate markets and uses them, like I do, and you see the value in it, it's definitely worthwhile to study how the interest rate markets influence or can impact or build clarity and trust in a consolidated indices market, or even a currencies market, or the DXY. It can be used in very similar ways across those different assets. But not to use as much in lower time frame or daily analysis, lower than the 15-minute exam. Yeah, so I definitely glance at these every single day, as you guys have seen, because it's also, it can also be very relevant when you're trading intraday. See, what we're focused on here is identifying the higher time frame narrative, but it's also impactful. The same relationship's impactful when you're looking for the lower time frames as well. When you're executing and you want to see a bullish indices, they're taking a buy on the 5-minute or 30-second. It'd be very advantageous to see that if we're bullish, trying to catch a buy in the indices on the seconds chart, that the interest rate markets are agreeing with that overall view, both from the higher time frame and the lower time frame. It's obviously very, very strong confluence if that's taking place. It's not a be-all, end-all, right? It's not something that is mandatorily needed to take an execution, because we don't want to keep the confirmations too large for us to have, like, say we have 20 different confirmations we need for an execution. We don't want to think that way. Okay, we want to have supporting ideas, yes, but at the same time we don't want to make that basically completely derail us from taking opportunities that may have a little less correlation going on, but that's just simply because maybe things are being manipulated for a minute, in the bonds and yields. You still want to be able to have your overall analysis and trust in the intermarket relationships outside of the interest rates, because that's impactful too. Sometimes we got to put the interest rates aside because they're just consolidating, right? But sometimes the the interest rates will be in consolidation, and that'll have an impact. If we see that, that'll have an impact in the DXY and the indices too, in the currencies. Consolidation or sloppy interest rate markets can also lead to lower probability, more choppy conditions in the indices and the currencies and the DXY as well. So that's another tool that you're given when you understand the relationship that the interest rates have with these other assets. Okay, so again, I've talked about this at great length here on YouTube, here and there, but ad nauseum in my private community. I have a whole series on navigating the interest rate markets and all the different relationships. Right, so yeah, cool. I see reference rather than conflict. Yeah, exactly. Of course, we prefer, if we want to get the highest probability chance of taking a high probability execution, we want risk on, risk off to be in alignment. We want news to support us. We want the higher time frame, daily, weekly, monthly chart to support us. We want to be in a kill zone. We want to be in a macro within that kill zone. We want to see everything supportive of the idea that we're looking at. And if all that stuff is together, and we also want seasonality to promote it, and then also COT, if we can have all those things in alignment, that's the highest form of high probability you can get. But again, it's not necessarily needed to have every element in alignment, because sometimes it won't. And if you're only waiting on everything to align with perfection, you're looking for perfection, and that doesn't exist. And you'll miss a lot of moves. It'll limit the amount of trades you take. Yeah, I mean, maybe that's advantageous for you, but you're going to be a lot less active in the market if that's something you demand, which I don't promote you to demand. Again, like I said, not one tool is going to be looked at as a be-all, end-all. It's all the tools put together that can create clarity, and then you can build trust when you execute, when you master what it is you're looking for in the market. And Power 3 and your model, the liquidity pools that are important, all those different elements are super, super vital. Okay, but some stuff can be off, and you could still take an execution. You just have to lower your risk, right? Just helps you manage your risk properly. All right, so yeah. With that being said, just double check. Did I miss any questions? No, okay. Man, today, if you guys haven't noticed, you're getting like a super in-depth masterclass on how to analyze charts from a monthly perspective. All the different components, all the different elements, why they're important, different scenarios to use them in, different influences they have for different scenarios, what impacts what, so on and so forth. I mean, and we're only an hour in, so we've got a lot more to talk about, right? So you're getting a very deep dive today for your monthly analysis process, as well as your weekly analysis process, right? Because, we haven't even dropped to the weekly chart. But yeah, so with all this stuff being said that we've talked about so far, these are the different levels we're watching. I want to see what the monthly order block is going to do. I want to see how these are going to behave, if they're going to respect the monthly inversion fair value gap or just get outside of it. It does look like the bearish order block and the bearish fair value gap here is holding. So that's kind of convincing that, there is a pretty decent likelihood that we are going to fail to hold in this monthly bullish order, this bullish fair value gap. And then price is going to start to collapse down. There's a lot of conversations around the interest rate markets recently. There's a supposed possible rate cut that's coming. It should have been cut months ago because there's not really much inflation in America right now. So it's unfortunate that there's been a pause, right, or a reluctance to do what's right. But yeah, we'll see. So, again, all that uncertainty has been showing in the interest rates, and just the lack of movement in terms of political, adjustments, right? The policy, not political, but the policy adjustments from cutting or leaving them the same or increasing rates, right? Lots of uncertainty around that, which is why this has been not really used as much to come up with a decision, but we have been keeping our eyes on it, obviously. And here and there, it pops off, right? like this down movement here supported the run higher in the indices, so the confluence worked there with the overall delivery to the buy side, which again I've been pressing on with the indices, and we finally got to our full target, which again we'll talk about that later. All right, so with that being said, I hope that chart makes sense. And again, we got a very similar objective here. These are the bond markets. This dictates where the currencies, foreign currencies, and the indices are going to go. So if we got the possibility for the yields to look like they want to tank, if it breaks down through these levels, if it gets down below these levels here, it supports bearish DXY. If we're going to continue to go higher on the indices and the foreign currencies, which we have been, we're going to want to see this now finally find some legs and start to move higher, which it seems like that's been, part of the vibe. It seems like that's been what has been taking place here overall. Okay, so we hit this quarterly wick, 3-month wick, hit the midpoint of that, and now we've basically justified a run back into this retracement, which is a weekly bearish fair value gap. And then, of course, we had the weekly bearish order block on the 2-week that we've been watching for a line in the sand. So this is our 3 PD array rule, okay, with the overall, validation principles when it comes to changing from one side to the next. Mind you, we're in a new quarter. Price has been very bearish on the bonds. Price has been very bullish in the yields. Okay, we're in a new quarter now. We have SMT, and we're about to, or looks like we're about to, start breaking through multiple PD arrays. So there was a decline to start the quarter, and now we're inside of something that's pushing back higher after we've taken out sell side, hit a higher time frame quarterly objective, and now price looks like it may want to violate these weekly PD arrays to the buy side. That would then signify to me that we may be seeing a quarterly shift in the bonds and the yields, especially if this declines, breaks through those levels I mentioned, and then starts to rally up in these 2 or 3 assets, then targeting potential buy side, maybe even these equal highs up here and this fair value gap. Okay, so again, this is something I'm going to watch, because if this continues to just rampage higher, right, and it breaks through these levels, that is extremely bullish for the indices, and nothing is going to slow down in what we see in the foreign currencies and the overall indices. Okay, and DXY will probably continue to smash lower. So we're going to continue to watch and see if that's going to end up being the case. Again, supported by this going higher and the yields going lower, that promotes buy-side currencies, buy-side indices, bearish DXY, and bullish commodities. Okay, so we'll see if that continues to take place. And again, this is hopefully going to show you over the next couple months if that takes place, which I believe it will, with decent degree of certainty. If it does take place, you'll remember these conversations in this process. If you've written it down, you'll start to build trust with it, and then you'll have it to use well on into the future, and it'll serve you very well, as it has served me and many of my students. Okay, so let me write this in real quick. Let's take it off. So yeah, this is my observations here for this asset. And again, it's very similar in this one too. If I was to go to the 2 weeks, it's got very similar characteristics. So we'll see what happens. I believe there's SMT at the highs too, just like there's SMT at the lows in the bonds. Okay, so yeah. So yeah, with all that groundwork out of the way, we now have a pretty decent understanding of what the bonds and yields should do. We're watching for the bonds to potentially break through these invalidation levels and then shift, giving us a buy-side delivery. We're going to see if the monthly order block is going to hold in here or if it's going to be violated, get down below the midpoint. If it breaks through that midpoint of the bullish order block on the monthly and it breaks down below this low, we have multiple PD arrays violated, opposed to this run higher and a shift in market structure. SMT at the start of a new quarter with a pretty strong decline, which would then put us put our interest down to seeking these relative equal lows here for value gap, the wick, and of course the monthly low as well. All right, or weekly low in this case. All right, so yeah, with that being said, hopefully we can, hopefully you guys understand what I just mentioned. Again, if you guys have any questions, let me know. Don't be scared to ask any questions. Monthly ZB1 looks like it's holding the last of a market maker sell model. Let's see. Looks like it's holding the last of a market maker sell model. On what time frame? Talking about like this. Because yeah, you could definitely look at that as a market maker sell model there. Oh, you're talking about way out here. I think that's a little too deep of a overall view. I mean, I guess you do got, there's some validity there. This was definitely a market maker sell model, 100%. I mean, look at how perfect that was. Second stage distribution, look how fast that delivery was. So I can say that if we do break above this, this whole delivery may end up turning into a market maker buy model, which of course we'll gauge that later on when it comes into play. Well, I mean, it's not too far, right? But you know, if this was something you were trying to wait for over the years, maybe it would have been helpful. Possibly. We'll see. Obviously, it did obviously take out these strong levels. The market maker sell model was in here. I can't necessarily make an argument for all of this, just as a whole. It's just a little too much. All right. You know, maybe that is correct. You know, I can't really identify too clearly where the specific areas are, aside from maybe this consolidation here. But even with that, it still didn't even violate it, right? So again, we'll see, right? We'll see if it's going to continue to sell off. If it does continue to sell off, then you know we got relative equal low targets, more long term. But again, that may take the whole year to get down there, so wouldn't be as impactful really. So yeah. So again, I hope that makes sense for what we talked about there. So we're on the monthly chart now for the currencies. So now this is where things get really interesting, because I talked about this breaker and this quarterly order block and monthly fair value gap holding. And if we were to violate that, that would have been a problem. I was assuming that we were going to continue to go higher and continue to rampage and blow out the high here that it blew out. I moved this to this high this morning because there's equal highs up there because we already blew this out. I called this. All right, those of you that are on the call with me right now, because you guys are with me most of the time, you guys are aware of this. You know, you've seen this entire run higher get called step by step, day by day, week by week, month by month, and it's just been flawless. Even up till last week, I said that when this is going to open up here, it's going to trade into it. It traded down into that a little bit, but again, price ended up finally blowing out the whole entire target we were looking for. Okay, we've been calling for buys. We've been calling for these specific levels to hold in price. I pointed out this breaker. I pointed out these new week opening gaps, this quarterly bullish order block, this fair value gap. Price traded into it. I said it should be able to stay above that if we're going to continue being bullish, which was the assumption. We continued to press for buys, and price smashed it yet again. Mind you, this entire run higher here and this run lower was called in the moment, real time, day to day, month to month, week to week, every single day. Okay, every single day that I was live, I called for this same narrative I've been painting for weeks. I knew when it was going to shift. I was talking about what would lead us to continue to look for buys. We had a balanced price range conversation in here, okay, where price was basically supporting this overlapping for value gap here, create a balanced price range and run higher, right? I said, you know, this was a bullish breaker. These down candles is a bullish order block, okay? There's a quarterly bullish order block right there. That's where the overlap was within the balanced price range. Right. Not only that, we had a balanced price range here too. Right. It just continued to press higher. Nothing changed. So again, everything has played out flawlessly. So I hope, because you know this is taking place and you know fully delivered, I hope that you guys have picked up and we're picking up on all the different stuff I was talking about. You know, I hope a lot of this stuff is sticking because you've watched it manifest in front of your very eyes. Real time, live, you know, nothing hidden. I've shown the dashboard and Top Step for my private community at 88%, 86 and 88% strike rate, and then couple that with the analysis that's been correct almost on a daily basis. like high 80% from the last, 6 months going on 7 now. So I hope that the things have been sticking. I hope the things that I've been mentioning you guys have been paying attention to. Those of you that have been paying attention and giving me the feedback, I mean, you're on your way. You're getting all the different elements. Those that are in my private community, the vibes. I mean, it's a regular thing. I don't even got to say much anymore in that community, and they're calling out trades and sending out opportunities and showing me executions and smacking funded accounts, busting through personal accounts because they don't like funded account rules. I mean, it's just incredible, the things that we talk about here. So again, I encourage you to really, really pay a lot of attention and, show up consistently if you haven't recently. If you watch these videos and you're new, I really encourage you, go look at the testimonials, go look and review some of the things I've talked about. Look at the live calls, watch what I say, and then fast forward to weeks ahead and look at the result. Go to the free Discord and look at what was shared. Look at my private community if you choose to join that. Look back on everything and see how often and consistent this has manifested. The stuff we talk about is not a game. This stuff is insane. Okay, literally, it blows my mind even every single week. I still can't even believe what takes place, like how consistent we can be, because I never imagined that I would be at the level of understanding that I'm at, and it just seems so simple. See, look at what Tony said. It always plays out. That's a strong statement for someone to say. It's a very strong statement for a mentor to claim that. But if they're coming out like I do, like ICT does, like some of the other ICT charter students that are savages, I mean, it's something strong. It's something that requires you to have something to show for it, or you're going to look like a fool on the internet, and nobody could say anything anymore. I could stop today, and just completely just leave that, and people will look back on the videos and see, holy shit, like that stuff worked out. Obviously I'm not, because I enjoy hanging out with y'all, but and some say, Fritz said, and some say it's the hardest conditions for them to trade. Yeah, isn't that amazing? It's amazing. A lot of people are getting wrecked. I don't stay here and say it's the greatest conditions, because it's not. But every single week, every day that I've hopped on, I've shown something to execute on. I don't give signals, but I've been doing a lot of, hey, this is where it's at, this is where it's going to go, this is where I would find an entry. That is my signal when I say that. That's a signal for me. I'm not going to tell you the exact number, where to put your stop. I'm not going to do that, okay? I give targets. I say what I believe, and you put 2 and 2 together, because I'm not a financial advisor. This ain't financial advice. I'm not licensed to give you trade advice. And if I didn't show this earlier, let me pop it up real quick. It is what it is, and I can agree that it is one of the hardest conditions. ICT has mentioned it's some of the hardest conditions. I mean, look at all the stuff that's happening, wars and chaos and a bunch of nonsense, but then also a lot of good stuff, so that's sending uncertainty in the market. There's also a lot of hateful nonsense going on in the United States political realm. So, a lot of the stuff is built off lies. A lot of the reports, a lot of the criticisms, excuse me, a lot of it's coming from very biased opinions. And that biased opinion, unfortunately, has a lot of people that are in Wall Street, and they are on some nonsense. Some of them are in the financial sector of the government, not changing or adjusting things properly how they should be adjusted, like, interest rates, for example. So a lot of the stuff is being very manipulated. There's lots of excuses in the way for them to do whatever the hell they want to do. So yeah, there's an argument to say that it has been some of the hardest conditions. But those of you that have been under my wing in this circle of influence, you have been able to hopefully not blow your account, not even come close. Maybe you took a couple losses here and there for your own mistakes, right? Maybe you got out too early. Maybe you executed too late and it turned around on you. Maybe you held on too long and didn't accept the minimums, which is what I encourage you to do when times are like the way they are. In harder conditions, in more low probability environments, you have to submit to taking down the minimums. 20 to 30 points in the NASDAQ, 5 to 10 in the S&P. You want to make sure your risk is already cut because we're basically combating the higher exposure to risk in the environment because of the crazy landscape that we're trading within, you know. And with those things being in play for our overall adjustments and process, what is there to fear? There's nothing to fear. So as a result, we come into the market confident, not worried about anything because, you know, we know what we're doing. We have guidelines in place to make it so we can't get obliterated. And, you know, we manage our risk properly. We know what we're looking for. And again, just because there's sloppy conditions doesn't mean things won't play out from that higher time frame. It just means executing is going to require a higher level of discipline and a higher level of, you know, experience. You know, you wouldn't send a person that's been in the military for 2 weeks into a global war just in 1 second. You know, just, oh, they just signed up. Okay, let's just go throw them in the war. Not tell them anything about the risk, not tell them anything about anything. You wouldn't do that. You know, sometimes they do if it's a draft and, you know, World War II type environment. But even then, they're still training them a little bit before they send them out. You know, so why would you want to engage aggressively if you have low experience? You know, become very aggressive inside environments like this. You know, look at the overlap here. This is what I was talking about earlier, what I've been mentioning the last couple of weeks in terms of identifying low probability or harder to trade environments. When this type of stuff is happening, that is beautiful. It's a beautiful indication that we are in a harder to trade environment. So as a result of you simply seeing this is a justification to cut your risk a little bit. It doesn't have to be dramatic, right? I encourage you to keep your risk pretty low if you're new, but, you know, just cut it a little bit. You know, cut it by 1/4%. If you use 4 lots, 4 contracts most times, use 1 or 2. You know, if you keep a, you know, 1% risk, drop it to 0.75%. If you have a 0.75% risk, drop it to 0.5%. You know, while you're engaging this until it shows that it wants to open up a little bit or gets a little more clear. Like, these are mandatory things to do. It's not the fun stuff. You know, some people go as far as saying it's the boring stuff. But again, like, you know, not everything, you shouldn't be here to be entertained. Like, you really shouldn't. You should be here to learn, bounce ideas, and, you know, hopefully enjoy hearing some of the perspectives that I share and then what some of the students in this community share. You know, but again, you want to make sure you're understanding the conditions because many are on live blowing their accounts, claiming that this is chop and shitty markets and not worth engaging and blah, blah, blah. But those people don't know what they're doing. You know, they don't have rules in place. And most of the time, those are the same people that will overtrade and over leverage and try to sell you a course. You know what I mean? They'll just sit here and complain. To justify their inadequacies as an analyst, they'll make up stupid things. Although it is a true statement that it is a harder to trade condition because of all the stuff happening, there's still opportunities. But they're opportunities exclusively to those that know what the hell's going on. You know, and even those people aren't going to be perfect. Even those people accept the fact that, yes, they're engaging in a harder condition, so the likelihood for a stop out or to get something wrong is elevated no matter who you are. Even ICT, that's why he's taking a 3-month break. You know, so these are, you know, you got to keep these things in mind. Consider this stuff, okay? So Fritz said, your inclusion of the multiple markets affecting each other and following signatures. Let me pin that. It's a beautiful... beautiful statement there. I'm not sure why the hell I can't. Why can't I pin it? Oh, I gotta pin it here. Yeah, I'm gonna pin that. So yeah, Fritz said, your inclusion of the multiple markets affecting each other and following the signatures that the algorithm leaves us on every time frame. Leaves us on every time frame, coupled with sound logic, has given the results we have seen. Yeah, exactly. You know, exactly. And I've done it live. Okay, there hasn't been 1 week that I haven't went live. There, you know, it's been a couple days that I haven't went live in my private community, but you know, I'm still sharing information, answering questions, still active, still providing like, hey, this is where it's gonna go. You know, these are my thoughts. You know, so yeah. and the results speak for themselves. This is why I don't feel I have an obligation to sit here and show you my $5,000, $10,000, $30,000 days. Why would I need to do that? If you're here to pocket watch, then okay, I get it. But you can't spend my money, and you're not going to be where I'm at right now. So it doesn't do anything for you except maybe be inspirational, or then again, it may also make you feel less than. And I'm not here to make you feel less than just because, I can do this or someone else can do this or that. I know that when I was first starting out, I had real trouble looking at everybody making $100,000, $50,000, all these thousands of dollars when I couldn't even make $5. It made me feel like I wasn't doing enough. It made me feel like my model wasn't adequate when it was. It made me feel like, what I'm learning may not be fully like all there is. And maybe I'm missing something. I mean, all these feelings came into my mind, which is why I am adamantly opposed to anyone out here trying to just show all this Lambo lifestyle. Like, who cares? That doesn't help you in any way. That's not going to make you be a better trader. It doesn't make me be a better mentor, and it doesn't satisfy me to do those types of things, especially knowing that times are as difficult as they are. I'm here to give you the information you need that can help you, and you will use what makes sense to you and disregard what doesn't make sense, because not everything I use is going to be useful, So yeah, and I try my best to lead by example. I never overtrade and over leverage. Sometimes I take, 3 or 4 trades depending on the condition and what happened as a result of the other trades, in my opinion, but it's very rare. I think I've taken 4 trades in a day twice this year. Okay. But other than that, it's been only 2, 1 to 2 trades. That's all I need. If I can't find it within those 2 bullets, I'm not going to be able to find it, and it's not worth it, because now my risk is elevated. Now my heart rate went up because now I might be frustrated, or it might be, something may be happening, in my personal life, or, something may throw me off. Maybe I missed something, all those questions come into play. And generally when I'm not able to knock down something within 2 executions, that promotes me and, should promote you to reevaluate what you're looking at. Is what you're looking at really going to turn out the way you want it to? Is it really going higher? Is it really going lower? What could you have missed? What has already printed that supported your idea or doesn't support it? If you hesitated, what made you hesitate? What's happening, right? Like, you got to analyze and reflect more than focusing on trying to take even more trades because maybe you feel you missed it. You have to limit it, because in the times where your mindset is supercharged with emotion, you're going to have to fall back on that type of process. That's a mental management process. After 1 to 2 trades, what is your process? What are you doing? What are you doing? Because you're going to be emotionally charged, either with fear, feeling of missing out, or maybe your confidence goes down, or maybe on the other side you're going to get greedy. Like, oh, I made $500, $200, $20, whatever size your account allows you to make, but you're maybe not satisfied. So now what? Now your next execution is going to be fogged by greed. Okay? Or if you took 2 losses, now what? You're in fear. You're upset. You don't want to take the loss. You don't want to end the day red. So when you take 2 trades and you try to go over it, you're automatically emotionally charged. And don't take my word for it. Go in and review your performance. Just think about it. The last time you took trades, if you overtraded and over leveraged, right? Or maybe you won a couple trades, right? What was your feeling? And did you take 2 trades? What happened when you took 2 trades versus taking more? How did you feel? The 1 to 2 trades is so important to me personally because it lowers the stress level. The analysis I do that focuses on what I focus on lowers the stress level, but it increases the clarity and it lowers the risk, because I'll never blow my account taking 1 to 2 trades a day. I'll never blow my account if I take 2 losses and I come back the next day with half the risk I had. I'll never blow my account or feel so deep in drawdown as I used to if I take 1 trade, drop my risk, and then on the next trade I focus on making it back at half the risk. Maybe hold it for more, or just make back the overall loss I took, and then come back the next day with a fresh mind. So this is all a process in self-management and risk management. and building clarity and building trust. And, it's vitally important to someone that's uninitiated, someone that has like no experience in trading and hasn't faced the things that we face after you're in the game for a while. This type of stuff doesn't sound interesting. And it's unfortunate because of social media putting this weird ass image in your face saying that, oh, it's all upside. There's downside. And if you don't have a plan for it, like imagine if an army went in thinking that they're solely going to win and they never planned for them taking a loss or losing men or the bad negative things that could take place in a military operation. Just imagine. Would that be smart to do? Like that would be totally stupid. Like that army would be destroyed because things do go wrong. Things will happen that you didn't expect. Or maybe you expected it. Maybe you knew, but you still didn't make a plan. If you do that, you're allowing the market to take advantage of you. Like you're allowing it to do what it has been processed or programmed to do. It's not to make you rich. It's to weaponize your emotions and lack of discipline, self-accountability, lack of organized processes against you. It's literally programmed to do that, to weaponize your own psychology, to make you feel left out, to make you feel greedy, to make you feel confused, consolidation, right? And then manipulate you, get you in and run aggressively one way and pull back really aggressively the next to make you get out early. Then it'll just continue to go. Like it's all programmed this way. So again, if you're not prepared for these types of scenarios with a process in self-management and how you're going to control these different things that take place, at least as best as you can, you're just asking to get destroyed and have more hardship, heartbreak, and things that are just not necessary or required to be an effective, long-termly successful trader. Okay, so yeah. So with that being said, hope some of that stuff is helpful to you guys. Again, it's not the super ecstatic fun stuff, but it's the inner workings of a trader mindset. It's the back-end information that it's like a computer, all the background complicated things that make the computer run, or make something effective. There's back-end work that's taking place, that's in place, there's processes and systems in place that are making things operate smoothly. It's the same with trading. You have to have a full-on system, a full-on business. And business is not always black and white. Business always, sometimes has ups and downs. It has many different things to account for certain issues. And this is even more important because you are the business. You personally are the business. So you know your strengths and weaknesses. So you have to make the, overall processes align with who you are. And I give a lot of stuff that's non-negotiable for you to take as a template. And, we have conversations like this to fill in any of the gaps, to help you really have a defined process for everything, psychological management, monthly, weekly, daily analysis, and everything in between. You just have to, spend the time here, ask questions, and, really come here to learn. Because again, if you're looking for signals, I give signals. If you pay close attention enough and you have a couple brain cells in your head, you're able to see that I'm calling signals out. Okay, I'm just not doing it like everybody else is that wants to, shove their, stuff in your face to try to convince you. I don't need to convince you. I'm not here to convince you. I would enjoy to see the channel grow because that means I'm able to help more people. But, if you're not convinced by me calling the market for 6 months straight, 80 to 90% accurate, I have not got below 80% this year. And I've shown it, right, with the dashboard and Top Step. And live too. Pretty much every target I've called out this year has come to fruition, except a couple of them, like 4 or 5 of them. Well, I think like 5. It's been 5 days that hasn't fully worked out based on what I've journaled. The videos I've recorded too. It's been very, very minimal, and it's been the hardest conditions to trade, right? It just shows the effective lethality that comes with the processes that I employ. And this is a big statement for me to come out here every week and say this. It's pretty big. So if I'm talking like this, I better have something to show for it. And I have witnesses. I have these videos recorded. So again, you can rest assured that you're here listening to someone that is willing to put his neck out there because I trust what I do. I have students that trust it, that are crushing it more than most of these people are. And, just a simple analysis itself that we do here is better than most people. And there's evidence of recorded videos, not just me saying it. There's evidence from testimonials, like things that Fritz and Tony say, and many others that, have crossed paths with me and pop in here and there to watch these YouTube calls. So you're, I try to mention this, a couple times here and there, because, it's hard to trust people in this industry. And, most people say that they're good and they're not. But, majority of people also at the same time, they don't come out here and do what I do, or, anybody else that goes live and is willing to be transparent. Most people don't do that, and there's a reason that, most of them are not doing it. There's a reason that most of them don't come live and put their neck out there like that, because they don't know what the hell's happening and they're scared of judgment. I'm telling you right now, I'll get things wrong sometimes. But there's a process that I employ too that helps us get back in line with things, which I've had to use a couple times this year with my private group. It's a process. I have every single process or scenario outlined with a process. Anything that I've struggled with, any issue I've had, a weakness, I've placed a rule around it. Anything that I want to be effective with in the market has a process around it. Self-management, risk management, targeting, liquidity mapping, overall bias and narrative, how to validate, invalidate, so on and so forth. All of these elements have a process. And I have them neatly organized also in a 10-point list or 10-subject list you should go check out if you haven't already in the free Discord and in my private community, which, I mentioned before. But, yeah. So, again, just getting back to some of the chart. I hope what we just talked about made sense and was helpful to you guys. It's very important to be able to sit back and think about some of the more important things. So I appreciate you guys sticking with me through those. But again, so for the currencies here, we've already determined that there's a potential likelihood for this to continue, given the fact that the bonds may break out of this. Assuming that they do, that should support continued bullishness. And then assuming this breaks down below the midpoint of the monthly order block, that'll help confirm that DXY will continue to support downside, and those will continue to support those. The interest rates will then support us going higher with things like this, and the lower in the DXY, and then higher in the indices. Okay, so again, these are the levels on the weekly chart we're looking at. We have all these higher time frame levels that I talked about last week. I told you guys to watch that and trust it, and guess what? It continued to trust. Invalidation level was the low down here in the midpoint of the breaker. Never even got attempted. The up wick here, break it down from the midpoint. That's in conjunction with the quarterly bullish order block. See how beautiful that played out to the tick. Price expanded away from it, essentially closing in a lot of the fair value gap in here. So yeah, and then now we're just above the high up here. And now long-term targets are being targeted now. All right, so we got the relative equal highs up here. We do have a fair value gap up here. It's kind of interesting. Okay, so we'll see if that comes into play at some time in the near future. It's a little ways away. But if this is going to continue and the bonds are going to continue going higher, we will eventually see this get targeted. Before it gets up there though, right, as always, whatever time frame you're looking at, especially if it's a monthly, weekly, or daily, you got to take the current and near-term highs and lows based on that time frame. So in this time frame, this is a current monthly high for June. So this is going to be a monthly high for June when the new quarters or the new month starts. Okay, so but for right now, the new week is going to open today, and we now have a previous week's high and previous week's low because it's a weekly time frame. Okay, so weekly high, weekly low. So we're going to open up inside the previous week's range. So if we're going to reach for anything outside of that, right, say this is our target, or maybe breaking down here is our target, it's going to first have to break through this candle's range, right, either the high or the low. So that's why, again, this is highlighting the importance and ease of application when it comes to mapping liquidity using this principle of liquidity mapping that I've showcased using the list of liquidity pools and the different PD arrays that are important. Then, of course, in close proximity, we have a bullish order block, and we have the monthly high up here as well that could end up being targeted as important levels. So, and then, of course, before the monthly high gets taken, this is going to have to be purged. We may have to retrace back into the bullish order block. Hopefully it respects that. That's what we would anticipate if we're going to continue to see buy-side delivery. So that is what we're going to watch. We have this, what is that? It's a three-week wick in here. It's pretty large. Okay, so we do got a pretty large, sizable wick in here, but that's in conjunction with the weekly bullish order block. So I'm going to go out on a limb and say we don't really need to have that there because it's so in alignment with one PD array already. We just know that that's pretty overlapped and may be significant. So yeah, and then of course we have relative equal highs up here. But again, for this week, for the start of this week, every week we go into the week looking for the liquidity, like I've mentioned, right? If you go to the monthly, mark the monthly high and low and close proximity PD arrays. Map out the premium and discount given the most recent high and low. If we go to the weekly chart, we map out the previous week's high and low. If the previous 2 weeks high and low, not this one but this one is relevant, right? Like there's a low that's available or a high that's available. You want to map that too because it's close proximity PD array, and then you also want to mark out the close proximity other PD arrays like a bullish order block, fair value gap, some type of high that's close, or maybe an upper fair value gap that's above, like up in here, or even down below, depending on what you want to see price do. And then of course you do the same thing when you go to the daily chart, and then of course you take that stuff and you use it as you go down to the lower time frames, knowing that you have critical, important higher time frame levels that are important to the overall overall narrative that's taking place. Okay, so yeah. So with that being said, hopefully that process in a nutshell makes sense. That's probably as easy as I can make it in terms of breakdown for what you look for on a chart for each time frame as you're doing your weekly, monthly analysis, and daily analysis too, because those are still important. But yeah, I hope that's making sense. And again, to start in every new week or every month or every new quarter or every day, we think of power of three, right? Because there's going to be a quarterly power of three. We're in a new quarter right now, so we're inside that starting stage of a new quarter. There's also weekly, daily, monthly power of three. So you want to keep tabs on that too. The higher the time frame, the more significant the narrative. Okay, the higher the time frame in terms of PD arrays being targeted or utilized, the larger the move will be. Okay, the larger range you'll see. And then of course you take that logic and you use it on the lower time frames, and it keeps you grounded in reality. It keeps you grounded in clarity, and it also narrows down or corners price into areas where you'll see a larger, more reasonable, more meaningful acceleration. That we all want to be a part of the big moves, right? Well, big moves come from higher time frame PD arrays, higher time frame levels being attacked, and higher time frame framework. Okay, the lower time frames are just for precision and more day-to-day engagements. All right, so yeah, with all that being said, hopefully again this overall process in terms of liquidity mapping I just mentioned, hopefully that makes sense with the lists I've given you guys and just the overall things we've talked about here. But yeah, with that being said, we're going to look for price to want to retrace a little bit into here. It's the end of the month, so I wouldn't be surprised if this is going to be used to cap the monthly range. I wouldn't be entirely overwhelmed or surprised by that, by it just holding inside this range. We may not see that, right? It may just continue to rampage. It's on a tear. But we're just going to have to wait and see. But I would anticipate if we are going to go higher, for me to want to engage a framework, I want to see us open up, maybe purge the high first, then decline to reach into this weekly bullish order block, or leave the high, attempt it, fail, and then trade into the order block. And then once we get into this bullish order block, start to see some more strong movement to then target the buy side up here and then the weekly high that's up here as well. All right, so it's the previous week's high. There is a SMT, I believe, on the daily, if I'm not mistaken. Yeah, there's a slight SMT there. We've definitely been super extended here. It's extremely bullish, extremely in a premium right now. So I wouldn't be surprised for a retracement to happen. But again, the target for the retracement is down in here. And if we just start freaking melting, then obviously we have to make adjustments. But yeah. In the June month, so basically the new quarter is somewhere in June 1st. I mean, you could use June 1st as the quarter change, or the quarter open price, or you can use the 15th, 16th, or 17th. One of those candles, depending on, because sometimes it varies. It's one of those. It's sometimes different, right? Sometimes it's the 15th, sometimes it's the 18th, sometimes it's the 17th or 16th. So you just gotta, feel for when it changed. At least in close proximity to that, just draw out the open for the quarter. And I can say that if we get a displacement below this, off the start of this new quarter, this may lead to a quarterly shift. I don't anticipate that to take place in any way right now, unless it starts to provide evidence, like getting down below the order block midpoint, breaking down below this fair value gap, shifting market structure down below this with aggression. That would then put some type of opinion for price to want to maybe look to go lower, and maybe it's going to shift from bullish to bearish, at least in the near term. But again, if that doesn't happen, my anticipation to start this week for the currencies is based on what we've talked about so far. I want to anticipate a retracement to target some of this, and then I want to see what happens when we get into here. Depending on how we open and what price looks like going into Monday, we may have a setup to frame counter trend wise at half risk to then look to target the setup PD array down here for the manipulation, and then maybe position somewhere in there to target that and then take profit within that. Or it may just slam through, hit this and then start to rally, and then in that case we could then get in line with something to the buy side, which is what I'd prefer, because nothing's changed yet. Nothing narrative wise or bias wise changes unless we see something that changes. That means breaking or shifting market structure aggressively on the higher time frame, breaking higher time frame PD arrays, no longer respecting bullish PD arrays in that case, and then other assets supporting that as well, like maybe a bullish DXY, doing the same thing, breaking bearish PD arrays to the buy side, leaving lows, so on and so forth. Okay, so yeah, I hope my opinion on this asset makes sense. Okay, it's kind of all, it's going to be the same for GBP and Euro, so it's both very similar. And yeah, we've blown out targets I've labeled for the Euro as well, beautifully. Again, if you don't believe me, go back and look at the other videos. Go back and look at some of my markups in the free community, and you'll see I've talked about the entire sell and the entire buy within this whole price leg from the start of the year and beyond. Okay, before, and we'll continue to do so. So Fritz said, seeing as the GBP and Euro are correlated to the indices with the inverse relationship of the DXY, would it be usable on the daily analysis for intraday price delivery? No entry. Yeah. Oh yeah. 100%. 100%. Like 100%. We're looking at the higher time frames to obviously help us support those intraday price delivery. It's not solely just for like weeks on it in advance, months in advance bias, but this is all literally putting us or giving us the building blocks to then trust a lower time frame delivery and gain clarity through even price pulling against us at the start of New York session, for example. Oh yeah, you're talking like SMT, right? Perhaps who is running for the highs or lows first, or who hasn't. Yeah. So with that statement, SMT, it's going to be extremely important because that'll tell you which one is the strength holder and which one is the supposed weaker. There's no strength and weakness, but it's just a good way to describe it. Instead of saying who has more interest to go higher or lower, it's if you have like a bullish S&T, whichever one made the failure swing to go lower is, like in this case it would be the euro. It's the stronger one between the two. Or the one that's more interested in going higher. Doesn't mean that the other one's not going to go. It just means if you're going to buy and you're able to trade both of them, wouldn't you rather be in the one that has more of a likelihood to go faster or more reliable to the upside versus the other one that maybe took the low out, which shows a reluctance to want to be aggressive, like in this case the euro, right? Or S&P and the indices, right? The one that makes a failure swing to go lower is going to be the stronger one if we're looking for bullish SMT, or the one that makes the failure swing to go higher if we're looking to see price reverse. That's going to be the one that is more significant to the downside, or will have a more significant run to the downside. Okay, so you'd want to short the one that's showing the failure swing. For instance, if the DXY is lagging or aggressive, and it seems like the indices are waiting on the DXY to move. And it seems, so if we see like a crack in correlation like that, something's obviously happening, right? And consolidated indices or DXY, you definitely want to jump over to what the interest rates are doing, because a lot of times that relationship will be messed up because the interest rates are reluctant to do anything. Or, we could simply be in the summer months, which has a lot of characteristics of cracks in correlation, consolidation, very jerky seek and destroy profiles. Of course we could trade in all that, as I've proven for weeks. But you got to make that decision. Are you willing to take that type of engagement? So if the DXY or any of, or like the interest rates are kind of cracked in correlation, but we still see like the foreign currencies and the DXY, or the foreign currencies and the indices running, then you just put those others to the side. But because there's a crack in correlation with a couple of the different assets we use, you have to cut your risk and trust your higher time frame analysis and that relationship between the euro and the GBP mixed with what's happening in the indices. So whenever something's not correlating, you take that as permission to drop your risk. Cut your risk a little bit. What's the need to press into something that's showing you red flags? Those are red flags, cracks in correlation, stuff like that. Consolidation in the overall interest rate markets with a reluctance for any other assets to run, or the asset you're trading has a reluctance to run because of that. Those are all indications that you need to relax and just wait, sit on your hands, use a statement, I need to wait for more information. ICT says that all the time. Sometimes you got to wait. I've said it a couple of times in the last couple of weeks, especially with the indices, or the interest rates, because they've had so much chaos going on with policies and just like being stuck, wars and everything, things with the US dollar. All that stuff has caused them to be reluctant to do anything significant since January, right? This has been the whole entire year. I've had skepticism with what's happening in the interest rates. That may change because there's movement now and conversations related to possible rate announcement adjustments and cuts coming in September. Okay, so there's movement happening. There's a bill about to pass that's going to stimulate the economy. There's lots of different stuff that is impacting what the interest rates are doing, and it's put us in a mode of caution and very, very strong attention to how we're managing risk and whether we're following the rules or not, and never over trading and over leveraging ever. Okay, it's very important, and it's a very experience-based thing that I've been showcasing to you guys when it comes to that relationship and how to navigate certain conditions, let alone how to identify them and what to do or what's leading to what type of price delivery when it comes to intermarket relationships, and how to behave around that, which is part of the question Fritz just mentioned. So yeah, it's definitely when there's red flags or things that aren't in alignment with the process that I showcase you guys, which I pray to God you guys have been writing down and taking pieces of and building the system, you know, whenever something's out of alignment, it means drop your risk. You know, your whole process is, you know, very organized, the stuff that we do here. And whenever something is out of place, it's telling you something. Whenever there's multiple SMTs and everything's consolidating, or cracks in correlation, or you know, looking at seasonality and prices doing one thing or another, everything is telling you something. There's intel to gather from every element. It just depends on, you know, what that evidence is. Like, what is that data giving me clarity on? You know, how am I going to use this stuff, and how do I behave in certain circumstances? You know, all that stuff is experience based, and I hope a lot of that stuff is. I hope you guys have gotten value from a lot of that stuff that I've shared this year, because it's very important stuff. It took me so long. 6 years is a long time. You know, it's a very long time to get to where I'm at, and I didn't think it was going to take this long. You know, I didn't think it would take as long as it took. You know, I was just like everybody else, thinking that everything was going to be ready to go in 2 months of me taking signals. Like, oh, it's a bunch of squiggly lines here and there. Oh, that's easy. Push buy and sell and make millions of dollars. Oh, sounds so. Oh, this dude's got a Lambo. He looks like an idiot, but he's able to do it. He's like a 20-year-old. He seems like he's doing well. If he could do it, I could do it. Then you get in following a RSI or something, and you realize really quickly there's a lot more to it. You know, and you know, eventually you submit to it. Some do, but then, you know, most quit. You know, because it takes longer than you expected. But although that's true, you're also going to be able to take this much further than you expected as well. So on both ends of the spectrum, you know, things are worthwhile. You know, so yeah, I hope that stuff made sense. You know, these are great conditions for me to be able to talk to you guys in and tell you about and help you navigate, because you're learning in some of the hardest conditions. But you're also being able to steal some of the confidence and some of the organized process and what does what type of lecture or communication for specific topics that, you know, hopefully you can implement it into your own stuff. You know, you're gaining experience by being with me, by listening to these things, by watching stuff play out continuously, watching me identify different levels, what's important, what's not important. Like, you guys are learning probably much more than 90% of people in the industry that are looking for a mentor, you know. So yeah. So yeah, if you guys have any questions, let me know. But if you don't, I'm looking for the currencies to go higher. Want to see a retracement to the fair value gap mixed with this weekly bullish order block to hold and push price higher. Otherwise, if we break down, then obviously we'll make adjustments and see what's taking place. But my target is up here. I have a monthly high up here that's available, right? This, these are all targets as we look to possibly get up there. But I wouldn't be very surprised if we get a retracement, given the fact that it's the end of the month, or consolidation. Okay, but I'm favoring buy side still because there's nothing telling us otherwise. Right? So yeah, with that being said, move on to DXY. Okay, so if we look at the DXY, okay, we've had just a very strong, aggressive move lower. I have, again, just like all the other assets, I've called this lower. I had a target, a quarterly fair value gap, okay, when we were way up here, not even breaking through the low yet. Quarterly fair value gap. If I zoom to the quarter chart, this quarterly time frame. Not sure why this is so giant. Oh, whoops. So yeah, the quarterly fair value gap has been traded into. Okay, what the hell's going on with that? So I've got the monthly time frame, got this big wick in here. We'll talk about that in a second. All right, so pretty much everything that we have discussed here has beautifully played out Like I said, the quarterly fair value gap. Go back and look at some of my other videos. We've been in line with that all through this rally up. I still was bearish. How many mentors can you mention could have done that? Oh, I'm gonna stay bearish. Most people would have been, oh, it's bullish, it's turning around. I heard many of them on the live call saying, oh, it's gonna be bullish. It's the bottom. We're bottoming out, boys. The market's gonna crash in the indices, right? Because of all the political nonsense. Yeah, okay. Yeah, sure. Line in the sand was respected up here. We had this bearish breaker in here, as I mentioned. Beautifully, flawlessly delivered. Everything has been beautifully delivering, favoring what we've called out for months, since January. Okay, even with this. So every asset I've looked at and talked to you about, except the interest rate markets, which have been in consolidation for the most part, so you can't really, there's no objective. You know, it hasn't really reached for anything. But even that, on the lower time frames, when I've been calling targets, they have been getting met inside the consolidation. We've been navigating it. You know, so and then of course with this, even this big run here, I called this higher to this monthly fair value gap. I called the low, or I called the price going lower as price broke down, right? Especially when it overlapped this fair value gap here. Go back and look at videos I did. Okay, you'll see that I was talking about this all the way up, and then once it hit that, all the way down, and all the way down to this very low. We've continued to be in sync, and it's been serving us extremely well, and undeniable skill set has been shown. You know, and you guys have been getting a lot from that, so it's amazing. So we got this monthly wick here. So that midpoint, notice how price respected that, broke through it, came up, and we just completely respected the, oh, whoops, let me pull this up a little bit. Sorry about that. But yeah, so this whole entire delivery, now we've pretty much filled the quarterly fair value gap. We still have like a little bit more to go. Not sure exactly if it's going to do that. We may use this level in here to then retrace a little bit to cap the monthly range. Because again, it's the end of the month, so we got to consider that. You know, so the monthly candle is probably going to close a little bit deeper into here. I wouldn't be surprised if it does that. But we got a previous week's low here too. So yeah, and then we got this order block here, and then again we have that monthly wick. So again, I wouldn't be surprised if we trade up into some of this. I don't think we'll get to the mid portion of the wick here because this is a large wick overlapped with a displacement candle. So we'll see. The issue with that, you know, the only issue I have would be the fact that we hit the full fair value gap in here pretty much, and if it uses that and retraces against these levels in here, I wouldn't be surprised if it does look to target the midpoint. I don't feel it will though, unless I see evidence that it's going to, moving into the next couple weeks. Okay, so with DXY, I'm going to try to see if we have any more juice to maybe retrace, start the week, give us a power of 3, maybe set a high up in here inside the order block, and then maybe look to try and attempt to blast through the quarterly fair value gap once more, and just fill it in entirely. It did leave a little bit open. But then again, it may open up, wick down through, closing the whole fair value gap, then look to just close inside the quarterly fair value gap to end the month. Okay, so yeah. So my narrative hasn't changed unless this high is broken up here. The narrative is still very heavily favoring sell side, and the bonds and yields are also supporting that idea for now too, as well. Okay, so yeah. With that being said, I mean, there's not really much more to talk about with DXY. I want you to do the same thing that we talked about in the previously when we first started, and when I was talking about the liquidity mapping principles and different elements that you want to keep in mind for each time frame, and how to spot and identify important liquidity pools and important PD arrays that are going to be useful for you near term. Okay, there may be a longer term target, like I had this quarterly fair value gap when we were up here. Okay, but all throughout, there's different levels of liquidity to frame opportunities off of, which the liquidity mapping idea or framework I give in that paragraph I showed earlier basically tells you guys all the different elements in terms of liquidity that you'll ever need to know. You don't need to know, this is another big statement, you don't need to know anything else about the liquidity. No other topics about different levels and all these things. You have a full list of important liquidity pools that you could use for the rest of your life and always find a setup every single day if you have a model, okay, and build your experience. Okay, you don't need any other pools of liquidity, any other concepts about liquidity, nothing. That is all you need. That's all I use, okay? So, I mean, I do pretty well, so, it's plenty for everybody, okay, to always have something. And one will be, more popular to you than others. Like, for example, I like previous day's highs and lows and London's highs and lows. And then sometimes the overall, why am I blanking right now? And the previous week's highs and lows too. What the hell? I just blanked out. It's wild. But yeah, so previous week's highs and lows, depending on if it's close, of course, previous day's highs and lows, and then London's highs and lows as well. Sometimes previous AM session highs and lows are really helpful too, which again, I have all that in the list. So, just go verify that. And again, guys, if you get value from the content, please don't forget to subscribe and like the video. It's really helpful. It also helps other people when they come to the channel. If you enjoy the content and do support me, it helps others when they see the likes. It helps YouTube know that what we talk about here is worthwhile. So again, if you guys can help me out with that, I greatly appreciate it. It does a tremendous amount for these videos to be able to reach those that do need help, to reach the right people. So it's obviously free to do that. So if you do enjoy the content and support what I do and get value and have had progress, right? Definitely don't forget to like the video and subscribe to the channel. I appreciate you guys in advance for that. So yeah, I hope everything thus far throughout this whole video has made sense, especially right now with the DXY. I'm going to anticipate power 3 as I do with every asset, and we're going to look for it to open, rally up, set some type of retracement, and then potentially continue to tank. There is, again, a likelihood, because it's a new month and NFP week, that we're going to be stuck in consolidation. So, keep that in mind. We're going into the week with a cemented narrative being bearish, but we have an allowance for price to pull back against us and give us the power 3. It's not pulling back against us. It's manipulating to set up a further premium based on where price is at, to then set up further short positions, unless it's going to turn around entirely and then start breaking through these levels up here, which again we have to make an argument for later on. We're not just going to anticipate that ahead of time, because that would be stupid. We have multiple days, possibly multiple weeks to navigate before that happens. So yeah, we'll see what happens. So again, the order block here is what I'm looking at. Let me actually label that for you. So we've got the daily order block, and I promise we'll go through the indices fairly quickly, because we have we can go through the indices fairly quickly at this point, because we've done so much work so far. Okay, we've really cemented and set ourselves up for success, given the things that we've talked about and the things we've been able to identify. Okay, so yeah. So that being said, this is all I'm going to have here for the DXY. This is going to be the same thing I give my private group. I want them to watch these videos too, because when I'm with you guys, I'm not with them, unless obviously they ask me to get on a Zoom call. So yeah, does all this stuff make sense, you guys? You see this rejection block I have labeled up here? I mentioned that before the fact. Right before this happened, as this took place, once it broke down below this low, the rejection block, then the rejection from this breaking down below this was a shift in market structure from the monthly fair value gap. And then that's what set me up to take the sell off. And there was an SMT between the euro and the DXY at that time. Bearish SMT and bullish SMT between the two currencies. And so you could see kind of some of the inner workings of what I used to trust the drop. And this I've gotten to great detail, so I want you guys, if you didn't ever watch this video in March 3rd or February 24th, somewhere in there, if you didn't watch that, for this week, maybe even the week after. I think, yeah, the week after would probably be better. Maybe the week of March 17th. I highly encourage you to go and watch that video, because it talks about this specific piece of price delivery. Something very, very, very important happened in here that is very uncomplicated but highly effective. So I encourage you to go look at that video from the week of March 17th, 24th, or even up to the 30th of March. Very important. Some of you guys may already kind of understand what it is if you've been with me for a while. Something very important happened there. So yeah, and there's a reason I outlined that this was not going to be traded into too deeply, and this should act as an institutional order flow entry drill, and target was down there. So yeah, go watch that after this. You can skip through it too. Just go look at what I said about DXY. So yeah, I hope all this makes sense, and with that being said, let's move on to our beautiful, amazing overall indices. Okay, so yeah, with that being said, let's actually throw some of the markups back onto this chart. Okay, so quarterly fair value gap. I'm gonna keep this pretty bare. This is all I really need right here. So that for the monthly. And we got the NASDAQ here breaking above the high. Target satisfied completely. I mean, it's incredible. All the way down here, this huge wick didn't fool us. Many people got fooled. Many people thought the world was ending because of this. No, it didn't fool us. This bodies tell the story, the wicks do the damage, and DXY told us the story too. And so we were able to hold that. But yeah, so the current month obviously has the, oh wait, actually let's go to, oops, I got the wrong one. Sorry about that. I was on my clean charts. You always want to have a clean chart too. Like one that has no markups or very minimal markups. Right? And I believe that this is this is a continuous contract. So the NASDAQ looks a little bit different. Because a continuous contract has this is a good example of what the difference is. See how this is where it's at versus what the continuous contract does. The continuous contract already blew out the high, so that there's a discrepancy with what's actually happening versus this specific view, which is the contract, the actual contract month closer to price. Right. So yeah. Let me make this a previous new week opening gap. Make the lines a little smaller. Right, so we got this bullish order block, this weekly bullish order block. Again, those of you that have been with me for a while, from like the last week or so, couple weeks, we've called this entire move. This whole market maker buy model was called. We literally framed everything. And so remember what I was telling you earlier when I was mentioning the IPTA 20, 40, 60-day look back and cast forward? How within the 20th and 60th day, a significant low or shift in market structure will take place to continue, or an overall shift in market structure will take place to create a quarterly shift. Okay, well, if you take a look at this, just make this big. So if you glance right here, look at from the start of June 1st. It's the month that begins, or it's the month that has the contract month adjustment from one contract to the next. So it's the last month for the previous contract. Okay, so if you cast out 20, 40, and 60 days out, within that 20 and 60 days, there's always going to be some type of shift in sentiment or a continuation of what was happening in the previous sentiment. And a significant low or high generally also forms from the 20th, 40th, and 60th day. Go back and do your back testing on this, marking it off. Every quarter, Every month that starts a new quarter, put a line on it, cast forward 20, 40, 60, cast backwards or look back 20, 40, 60. Do it for each of the 4 quarters. You'll see this phenomenon is literally insane. Okay, it's one of those advanced structural mapping, anticipating type of tools. Okay, and it's not a be all end all. It's nothing that's useful for everybody. But if you're a freak like me that wants to understand this type of stuff and never be fooled at all ever, and kind of always have an answer to things, this is the type of stuff you look at. Okay, so you can see right at the 20th day, okay, 21 days. So you go back 1 day, it'll be like over here. Right as that happened, isn't it ironic that was the moment after 20 days passed from the start of the month that it just randomly set a low within the 20th and 60th day, but definitely after the 20th day, set a low and started just expanding aggressively after what I just mentioned. And I'm not making this up. ICT explains it this way, right? In terms of what the characteristics are, what it should do, what you should expect around these times, and why these reference points are eventful and helpful, right? You could see how it just beautifully delivered. Okay, and what did it do? It blew out the all-time high. Okay, so again, I just wanted to reiterate what I was talking about earlier and show you a visual representation of how much you can anticipate even when highs and lows will form, and where you could look for quarterly shifts in, and kind of what is the overall process behind that, at least at a very light level, not getting too lost in the details, okay, or the deep advanced intricacies that could come with this, right? But, between the 20th and 60th day, when you cast forward using the month that starts a new quarter, okay, because June starts the new quarter for this new quarter that we're in, September contract. Okay, so right at that month, right at the start of the month, June 1st, that sets you up to do the cast forward and look back to gauge where significant shifts could take place, like you see here, right? After the 20th day, between the 20th and 60th day from the start of the month, there will be some type of shift or continuation aggressively that's supporting the sentiment, and you could see that all that aligned also with a higher time frame PD array. So you can see how this concept dovetails also with higher time frame PD arrays and higher time frame analysis for timing, to help you with timing, right? So it's very interesting stuff, very interesting stuff. And for those that are freaks like me, I talk about it with you guys a lot. But of course, those that just don't seem to be interested in this, obviously I don't mention it all the time because most aren't going to be interested in it. I don't know why, but it's just just the reality of things, and I understand that. It's not a be-all, end-all like everything else. It's a part of a confluence you can use for anticipation for either a shift in sentiment quarterly or a plot where significant highs and lows will form, which can also help you identify retracements or just turning points in the market at 20, 40, 60 days, right, or near to it, right? So that is the IPTA data range reference, just to circle back from earlier. Show you a visual representation of how it can be used. So yeah, everything's basically worked out. Bias and narrative been bullish, nothing's changed. We were in consolidation for a little while, still navigated, pulled out opportunities, smacked it, kept risk low, and just kept pushing forward. My students have done very well as well, so no blown accounts. Some have taken losses, but they don't care. You know why? Because they have a process and they know it works. So, it is what it is. Sometimes it won't, right? Just like your car. Sometimes your car's battery will die. Sometimes something will happen to your car. What do? Just throw the whole car away and never drive again? Or think that, I can't ever drive again? No, you don't. So it's the same with this. If things don't work sometimes or seem like they don't work, you maybe miss something. It doesn't change the next opportunity you look at. Doesn't change the next analysis you do. You do the same stuff that works, or that you've seen that works, until you get enough experience to make it fully effective. But yeah, so again, looking at the monthly chart, price here, let me take some of that off. Looking at the monthly chart, again, we have a monthly candle here. So the first thing you do is analyze near-term liquidity pools So previous month's high and low. And then now we see it, there's a previous quarter high and low up here too. All right, so if we go to the quarter, this is the previous quarter's high. So this current quarter that we're trading basically within has blown out the previous quarter. Okay, and there's another quarterly high up here too. So this is a moment where you can see that even quarterly highs and lows can be added to the list. I don't add it to the liquidity mapping list, but you can, quarterly highs and lows, because look, it's in close proximity to it. So that's a close PD array. All right, so with that being said, so yeah, this is the all-time high. Okay, that's an all-time high, but it's also a quarterly high as well. And we are in close proximity to it. So that becomes useful, right, as a liquidity target, because it's so close and is very reasonable for us to want to blow that out. But it's also obviously a previous monthly high. It's the current yearly high that was up there. So yeah, and just all-time highs as a whole. So what are we looking for moving forward, given all the data that we've gathered so far, and just all the processes we've had, and how is all that stuff going to help us now? Because we've arrived now at the asset of our choice. So again, we see that bullish order blocks are holding, fair value gaps are holding, market maker buy model is about to complete. Okay, so we want to look for us to finish the job and blow out the high. We are at the highs right now currently. There's equal highs up here too. So again, it's pretty obvious that this is a buy side interest, right? We have narrative is bullish. Okay, so now what we have is a fair value gap. We have a new week opening gap down here. I don't think that's going to be too relevant unless price pushes through that. Something we can look at, let's go to the weekly. So yeah, we still got this fair value gap to watch just in case it wants to break down through it. That would be significant if it does that. If it was to violate this low, break all these different PD arrays in here, and end up breaking the low in the fair value gap, that would then potentially put us in jeopardy with price targeting down here. Again, I don't think that's going to take place unless it proves it by breaking these levels I just mentioned. So we're going to continue our analysis based in the fact that price is going to go higher. So we have a candle here that has a large wick. It may look to retrace into that. It's also a previous week's high. So this may be a circumstance where price tries to give a retracement, right? Try to fool people up here. Maybe it opens and then aggressively charges towards this level to fake people out, because the start of the week is generally manipulation, and then it may go, or it may just blow out the high, then aggressively retrace and have a bearish week to cap the monthly range that we currently are trading within. That's been pretty damn bullish. Okay, so yeah. With that being said, that's some of my opinion there, and that's what I'm gonna be watching. Again, just like every other asset, we want to take Friday's high and Friday's low, previous week's high, previous week's low, current month's high and low, okay, and the previous month's high and low. And like I said, this is also a quarterly high, so that's also a close proximity liquidity pool to be used as a target. But you could just look at it as buy side, right? I wanted to point out the name of this and what was there, because again, it's important. It's not something that's important every day, like a quarterly high or low. But the way that I do analysis gives you the ability, if you ever choose to operate like this, it gives you the ability to call bias and narrative long term for months on end. Like I've called for 6 months straight bias and narrative accurately. High 80%. Like, who's doing that? Right? Like, I don't know anyone doing it. Not Jade Cap himself can't even do that. He's not even saying he's doing that. But I'm showing it, that I'm able to execute at high 80s consistently for the last 3 months. The data shows when I started that example challenge account, which I've been showing with my private community, 86%, 88%. I have not breached 80%. It's been hovering around that time. Of course, I've gotten things wrong sometimes. I showed that I overtraded one day, and it gave me a loss that I was not too happy about. But, I showed the recovery not worried about it. And bias and narrative overall has been correct. Even that day that I took a loss, I was correct on bias and narrative. So nothing phases you when you lose, when you're organized the way that I teach you guys to be. So I hope this stuff is inspiring to you and get you encouraged to really listen to what's being taught and then use what works for you. And then structure things properly. So NAS and ES looks very alike. YM not the same. How could that perhaps support our narrative and bias? So with the Kraken correlation we have, it may not support our bias and narrative. It may actually turn into an SMT. It may turn around and decide that we want to start declining now for whatever reason, because there is a strong SMT here. So we got to keep that in mind. We are somewhat breaking out of this. I would like to see that risk thrown off the table by, this supporting this fair value gap and then continuing to rampage higher. The Dow has 30 stocks, NASDAQ has 100, the S&P has 500. So that's why the S&P is the least volatile, because there's so many assets it's tracking. The NASDAQ is somewhat more volatile, and the Dow is the most volatile out of all of them, and generally does what the hell it wants because it doesn't have a lot of markets stopping it from doing certain stuff, but they're still correlated for the most part. Okay, so I don't necessarily know if it's going to continue or if it's going to reject, given the fact that it's the start of the new quarter, start of a new month, going into a new week, right? So we're going to have to carry a light bias and narrative. Overall direction-wise, we're going to stick to favoring more so. We're going to favor buys more so than sells overall for the narrative until proven otherwise, because that's just what it's been. And nothing changes in terms of bias and narrative unless something changes. That being 3 PD array rule, that being, we're losing bullish order blocks, losing fair value gaps, turning them to an inversion, breaking lows dramatically, leaving highs available, SMT at the highs forms, and it just displaces aggressively away to the downside. All those different things will give us a overall view that, price is turning around on us. Now, if those things don't happen and we continue to support what we've been saying, like we've been doing, we're going to stick to buy side, even if it retraces sometimes. If we're just looking at it as it setting up or targeting a discount array, some form of discount array, or some sell side liquidity pool or PD array, to then try to continue to march higher from a premium to a discount. All right. So, and for it's a Dow daily and weekly, it's still all bullish, right? It's just we do have on this monthly chart a possible SMT taking place. So, and also here too, there's possibly a quarterly SMT taking place. Very reckless quarter though. Look at the huge wick, huge body, massive manipulation that we just encountered. So again, it's just something to refer to and watch. But overall, that doesn't change my interest to want to buy. Just because you see SMT doesn't mean that you engage it as valid. You got to still justify with DXY. You still got to watch and see what behavior is going to take place, especially because this is a monthly chart. You got to be able to verify it, and then also see 3 PD arrays break in order to change things, because nothing changes until something changes. Yeah, exactly, Fritz. See, you're catching on, bro. Proud of you, bro. I hope that's been helpful to get you guys to be more mellow and calm when you're looking at bias and narrative, and more trusting in what these weekly, daily, and monthly charts are telling you when you're navigating the lower time frames. Because if you're rooted in the higher time frames, when you go to those lower time frames, you're not going to be as fooled, because you know what the true story is. So if the seconds chart is declining bearish, but the daily or weekly and monthly chart is showing bullishness, you know that lower time frame you're looking at that's going against that is just retracing to some form of a PD array, some form of a liquidity pool to position losers on the sell side so they can rally up and weaponize the sell side against, or weaponize the sell side to target the buy side. It's to position them. It's manipulation, baby. Power of 3. Pulls against them, gets below the open price, rallies up, punishes the sell side by rampaging bullish, or vice versa. Punishing buy side, triggering them into then pull them by the hair and drag them to sell side. So yeah. So yeah, with that being said, when we look at the NASDAQ here, it looks pretty beautiful delivery. Okay, it was a very aggressive rampage higher, and it's just absolutely gorgeous. The whole market maker buy model, second stage distribution validation, all this different stuff that we've talked about kept us in the game going higher, and not phased by anything at all the market was doing. Even in the consolidation, we didn't care. I call market maker buy and sell models inside this back and forth with my private community. So we were able to set up a framework to navigate both the stop hunt to the buy side and sell side, and then we were able to call the fact that price was moving higher, positioning us to take advantage of that. Okay, and again, you guys have been able to take advantage of the overall processes and narrative, and the one live call per week to help you continue to trust the narrative, because nothing's changed. And hopefully you guys have done your best to take advantage of that. And so hopefully we can open up. It may open up and just blast through with a gap to blow the highs out. It may do that. Or it may open up, leave the highs, and then decline to then look to rally again. We're so close, I don't think there's going to be a deep retracement. Maybe it'll retrace to sweep out Friday's low, then go. Or it'll, be stuck completely until the end of the month. I don't believe it will. I think it's going to blow out all-time highs again, and we'll probably close somewhere up there. Maybe it'll retrace and close down into here. Maybe that's a possibility too. But all of that is still supporting the fact that we're still favoring buy-side liquidity. Any decline is looked as counter trend. So if you find an opportunity to target some type of short, cut it in half or more. But then when it starts to provide evidence, wants to go higher, keep in mind that that is where we are wanting to favor the most. But we're allocating an allowance for price to go against us a bit. But that's only looked at in the form of setting us up at a discount to then target more premium price delivery. All right. So yeah, with that being said, so we've got this daily. So I think I'll mark this daily for value gap 2, just in case, because maybe it reaches down to there, hits it, and then goes. So yeah, these are my opinions for today, for the coming week. This is the analysis we do for the month. We started with COT, the news, seasonality, had a conversation about that. Glanced at that, got our opinions on that. Then we went to we talked about some psychology stuff, some risk management stuff, some required stuff, non-negotiable things, targeting, liquidity mapping, all the different liquidity pool levels that are important. We talked about SMT. We talked about bonds, yields, DXY, currencies, and now the indices, overall, how everything impacts one another. We talked about all these different things today. We reflected on how we've called every single delivery to the downside and buy side, all of our targets being met up until this point, which is something to be proud of. And if everything's made sense, as I've been doing that, as you've been watching me throughout the last 6 months, if it makes sense to you and you've been seeing results, pat yourself on the back. I only deserve a small portion of that credit. I'm just like a tour guide, trying to guide you guys towards the right things, and you still got to find your own way. I don't give signals, but people that have 2 brain cells to put together, when I'm on live calling opportunities, like where price is going and saying, oh, this is probably a good opportunity. I mean, you could put 2 and 2 together. I don't have to show you entry, exit, all that. Although I do show you the arrows when I execute on my live account, which I do from time to time with you guys. Signals shouldn't be your main focus. The framework and how I'm deciding and knocking out bias and narrative in the high 80% level for 6 months straight in front of people live, I mean, that should be something you're more concerned about learning and figuring out how to do that, rather than trying to just get me to give you trade signals, which I still give anyway, even though I hate it. I just make you kind of work for it. But it's not rocket science. Just look at what I'm saying, right? So yeah, I hope that everything up until the 6 month point has made sense to you guys. It's our 6 month anniversary, right? It's almost in August going to be, my overall trading anniversary when I first started back in 2019. And it's been a long road. It really has, and couldn't be more grateful. Humbled by you guys coming to get help from me and seeing you guys win. It's something that I truly admire, and one of the great passions in my life, and it always will be. Not only for myself, but to help you guys succeed. And now I'm helping my little brother learn how to do this, so everything's pretty much going the way that I wanted it to go. Took a little bit longer, but looking at price action for Friday on the 15-minute NASDAQ PM, I see 62% retracement level range that swept the high very suddenly, and although I was bearish for PM session, it was a lot further than expected. Yeah. Achievement. Yeah. I appreciate you, Fred. So Friday, generally you don't anticipate, or I don't anticipate that Friday is going to be aggressive. I feel that this whole entire price delivery was so super aggressive because it's completing the market maker buy model, second stage distribution characteristic. This here confirms that what we talked about down here was absolutely correct. The overall market maker buy model, fast-paced delivery from a second stage distribution, showing its beautiful face even on these higher time frames. And then towards the end of the month, I think they wanted or had a plan to try to get as high as they could within this month, because the new quarter, right? And they're just like blasting through to try to finish it off to end the month at such a high level. We had a full recovery. All these people that thought the U.S. economy was going to blow up, they probably feel real stupid. I never thought that. We never thought that. I knew this was going to happen. It's just a beautiful buying opportunity. Even the president himself said so, right? He's like, you guys need to go buy stocks, and look at where we finished. If that isn't the greatest trading signal any president has ever given, it's the only one that they've ever given. He literally gave it. That's insider trading for all the American people. Flip the script on them, right? No inside trading for the Congress or anybody else, but he gave it to the public, and look at how beautiful. And we've been in line with it ever since over here. So thanks, but no thanks, Mr. President. We already knew. We already knew it was happening. But yeah, so just the overall delivery that happened on Friday. Just drop down a little bit. Pull out some of the price delivery. Yeah, this is completely understandable that they did this, that they pulled back on everybody, because it's Friday reversal, right? We hit a higher time frame PD array, hit all-time highs, and significant buy side, which is somewhere up in here, ran up above it, boom, purged it, and because it's Friday, this is the risk on Fridays. This is why you never push for what happened during the week. If it was accelerating aggressively through the week, Friday should be looked at as a possible bearish opportunity. Sometimes it won't. Sometimes it'll just purge the low like it did here, and then give a nice little run to the buy side, continue, and close even higher. But a lot of times it's going to do this, because think about it. It's been bullish all week. It hit a higher time frame PD array, and then price basically ran up one more time and then aggressively purged the low. Why do you think they did that? Why is this likely a lot on Fridays? And why is it always to be considered on Fridays as a potential reversal when it hits higher time frame PD arrays or liquidity pools? Because they're capping the weekly range. They're capping the overall week price delivery off of the heels of a 1,200 point range. Yeah, take out people who bought simply from the whole entire week, right? Generally, Friday and Monday is a trap day, manipulation, consolidation, and TGIF reversals if a higher time frame PD array is met. So those are the perspectives on Mondays and Fridays you want to have, because everybody that was buying in here has massive euphoria, thinking it's an all-time high, everybody's bullish, it's going higher, all the news is positive that's coming out from the talking heads on the mainstream media and on social media. Everybody's buying. So it's only right for them to try to upset that on Friday when we're just about to hit the all-time high. Right, we're within a couple points, and it failed. Right, think about everybody that sat here thinking, oh, it's going to blow the high out, and then all that happened. It gave an aggressive run higher here, stalled out, and then that euphoria was used against them. Bang, stopped all these people out there, rushed their stop, or got greedy, and now we're still well on our way to trying to blow out the all-time high, which I think is still going to be the case. I wouldn't be surprised though if they try to maybe even dig down, try to blow these equal lows out here. It's perfectly in alignment with the thing that I mentioned when we were on those higher time frames. So it's the daily fair value gap here. Isn't it pretty interesting how that daily fair value gap aligns with these equal lows, which would then continue to keep us bullish because we're rooted in the higher time frame? Like, isn't that interesting? Someone that saw this decline on Friday probably thought, oh, bearishness, it's going to drop forever. You know, there's many people that probably thought that. Oh, it's going to top out. It can't go any higher, can it? Like all those types of thoughts. You know, we use that against everybody. Right? So, previous week's high, right? This may be the start of price leaving the all-time high for them to then try to displace, right? This may be a shift to try to get us to drop down here to take out all these people before they look to try to blow out the all-time high. Or like Fritz just said, hoping for it to gap up. It may gap up. You know, you never know. You know, we'll see what happens. Nobody can 100% tell going into a weekend, going into a new week. You can't tell coming off the heels of something like this, especially with all the stuff happening in the world. You might as well just wait. Let the first day or so, Sunday and Monday, give you some insights for what's going to happen. Ah, man. You know, let the start of the week give you insight. That's why Tuesday, Wednesday, Thursday are the best days to trade, at least for me. The most losses I've taken in my career so far have been on Mondays and Fridays. Fridays thinking price is going to continue in the direction that it was going, and it reverses, or Monday trying to, try to call the expansion towards that higher time frame daily, weekly higher time frame PD array or liquidity pool, and then just getting caught in manipulation. So those are two of the main scenarios that I've taken losses in. And then, of course, trying to anticipate the daily range move starting before 6:30 AM Pacific Standard Time, the New York Open. Getting stopped out before because you're getting trapped in manipulation if you trade before the 6:30 PM or 6:30 Open, which is New York Open, the AM Pacific Standard Time. You can get caught in manipulation there too. So those are the three scenarios I've taken the most losses in, which is why I have rules based on these specific elements. When there's no news before 6:30, don't even look to take a trade before 6:30. If anything, if you can't get a grasp on where it's headed and you don't know if you're in manipulation or not at the start of the day, wait till 6:30 anyway. If there's two news, one at 5:30, one at 6:30 or 7, wait till after 6:30. So most of the time you're going to be waiting till after 6:30 happens because you're trying to anticipate the manipulation, or I am at least. Friday, you always got to keep in mind price could retrace. So once Friday comes, once Friday comes after a very strong week, anticipate the price is going to probably go against you if it hits a higher time frame PD array. That's just an automatic assumption when you're going into Fridays when price is hitting a higher time frame PD array, or took out liquidity, or was aggressive throughout the week. Now, Thursdays and Fridays may be aggressively one-sided if Monday, Tuesday, Wednesday were consolidating and didn't do much. That could give a Thursday expansion, right? That's part of the, or a midweek expansion, or whatever ICT calls it. It's part of the profiles that he talks about with weekly profiles. And then, and then Monday, again, it's a manipulation consolidation most times because it's setting up the start of the weekly range. So you got to keep these things in mind. So with those things being said, you cut your risk, and you just have the proper perspective around those times, whether it's the daily range or the weekly perspective, using Monday and Friday perspective, or the start of the day for the daily range going into New York, how to navigate it, how to think about it, which again is something that I've gained through experience. So I hope you guys write down what I just talked about, because those are massive gems. Like, it goes over most people's heads. The little gems that are super strong, like what I just said, most people, it'll go over their head. And, it's a testament to a lack of experience, which is why a lot of this stuff that I talked to you guys about, eventually you'll see if some stuff doesn't make sense or doesn't seem important, eventually it will. But again, what your experience is at a particular level, only certain things make sense and certain things seem important to you. But as you gain your wisdom and increase your experience as a trader, as an ICT trader, or just watching me or watching other videos or your own experience, you start to really see what's truly important. And you start to see that trading doesn't have to be so complicated. There's only certain things you need to focus on a daily basis. It's not every single ICT concept needs to be understood at every moment of every second of every day, or you're not going to get an entry. Like, that is in no way at all like reality at all. There's only what's important in the price right now. And that's why the things that I do, the way that I teach, the way that I talk about things, the things I highlight, that's why it's so helpful to people, at least from my perspective, because I tell you what's important now, what you can use daily, and then you see me do it for weeks, months, years at this point for some people, and it's just it fits just beautifully, lowers the stress, makes everything make sense, lets you accept when times don't make sense because you're just waiting for more information, and yeah, just everything in between, right? So yeah, with that being said, guys, I guess we'll put a ribbon on it. Thank you for hopping on with me and sticking with me. Not many people stick all the way through the whole time because there's a lot of stuff that some people probably don't understand or haven't been here for long enough. But you guys that stick with me for a long time and are here consistently, you see the results, and you're the people that I'm talking to continuously. And if I can get more people like you guys to be exposed to the channel, that would be great. So if you have any friends that are just like you or similar, have similar passion for trading like you, definitely spread the message. Word of mouth is the best way to build a amazing tight-knit community, which I've noticed for my private community. So I feel it's going to be the same here too. So yeah, let's spread the blessings, spread the love. Hopefully you guys got value from today. Don't forget to like the video, subscribe to the channel if you haven't already. Yeah, I'll keep you guys updated throughout the day with what happens at the open. I'll send out some markups for those that maybe missed the call today. But yeah, get ready for another amazing week. Hopefully you guys have been inspired lately watching what we get to do here, and hopefully you've been able to utilize a lot of the tools that I've shared. And I hope that everything has made sense today as well, because there's some new things we've talked about. Just some other stuff we've reviewed, COT and IPTA data ranges, so on and so forth. Fritz said thank you. You're welcome, Fritz. God bless you, brother. God bless each and every one of you guys. Again, thank you for hopping on and sticking with me. Hopefully you got value from today. Let me know if you have any questions. If you guys need any extra help, obviously I have a private community for you to join. If you need more of a handheld experience, just for those that aren't aware that I have that, definitely go check out the links in the bio or in the description. But yeah, with that being said, I will see you guys on Tuesday when we hop on for our one live call per week, which should be pretty interesting because that's the start of the news for the week. Again, remember there's NFP this week. Risk is elevated overall, so be very wary about how much you risk, and just make sure that you're cautious and don't do anything stupid. Okay, listen to the things that I tell you. Take 1 to 2 trades a day. If it wasn't worthwhile and more was needed, you would see me doing more. But I show screenshots when I take executions. I point out things ahead of time. And I prove that I only take 1 to 2 trades. I prove that I do exactly what I tell you guys about, so you guys can trust it. So if you haven't trusted it fully, start to trust these things. 1 to 2 trades may seem like it's nothing and you can't get rich off that. Cutting your risk after a loss may seem like it's counterproductive. I can assure you from experience, it's not. It's a backwards mindset, like many things we think about when we first start. So yeah, just keep that stuff in mind, and let me know if you guys have any questions or need any help throughout the week, and I'll be happy to do my best to assist you. And again, you could join my private community if you need more of a one-on-one type of experience. For those that don't know, I have that, and maybe need a more intimate mentorship, apprenticeship style system. But yeah, that being said, thanks guys, and I'll catch you guys on Tuesday. God bless.